26,807, up 173. The VIX has been a huge change. On to the next screen. And the VIX here has been extraordinary, blowing through 25.24 down to a 23.87 level. That is a massive change over the last 5 days from the tone of measurement of volatility that we've seen, a lesser volatility signaling a lesser fear. I'm watching rates in Europe, Francine. They really haven't done much. What have you seen on the Italian-German spread, that barometer of all this fiscal stimulus?
Not much, Tom. So they narrowed yesterday as markets anticipated that we'd get a deal, and today they're trading sideways. European stocks are climbing to a 4-month high, but again, the percentage change is nothing to write home about. It's up some 1%. And when you look at what the leaders agreed on, yes, it's a landmark recovery plan. Yes, a lot of people are saying that it's better than maybe not agreeing on anything, but there's still a lot of details that people want to get through. So euro again steady after the recent rally, and silver, Tom, extending gains above $20 an ounce.
There are benchmarks of our visit to Davos each and every year, and for Francine and myself, folks, a highlight has always been to talk to the gentle lady from Germany, Ms. van der Leyen. We would talk of the military of Germany, we would talk of the domestic politics of Germany, but now she's taken on much greater duties. And the last few days, she has led this fiscal summit. Let's listen in.
Europe as a whole has now a big chance to come out stronger from the crisis. Today we've taken a historic step we can be all proud of, but another important step remains ahead of us.
Ms. van der Leyen there. Maria Tadeo has given us 24/7 coverage, including an exhausting weekend, and we're thrilled that she could join us now from Brussels. Maria, I know you've deserved a vacation, and my guess is it's going to be in Strasbourg, France, with the European Parliament. And the simple thing is, what next? I know it's all happy in Brussels, but Maria, what does your reporting tell you of how this document will be greeted by the European Parliament?
Well, Tom, what I would say actually was a real celebration. It was a standing ovation for the Spanish Prime Minister and a real celebration at the Italian delegation at 5 a.m. in the morning. In terms of what happens next, you have to look at this document and focus on the detail. We know it's 750 billion euros. We know it's 390 billion in grants. If you look at the specific numbers, Italy is going to get 82 billion euros. The Spanish are going to get 72 billion euros. Just a few weeks ago, we were talking about a light bailout. We were talking about the ESM. Clearly, they're going to get a windfall. The challenge for those two countries now is to be able to use that money effectively. I was told by a European official this morning, the real challenge is to be able to absorb all that cash going forward and be able to use it in a way that really kickstarts the economy. For Mark Rutte, of course, he's going to his national parliament, and he's probably going to say it's a good deal because we're getting more money. We're getting a rebate. We were told that was done after Brexit, but clearly the rebates are very much alive in the European Union, and he claims he's put reforms at the center of the debate. But
I'm placing a new order to sell short euro at 114.435. So new order placed to sell short at 114.435.
Parliament, the European Parliament, actually agreeing to this and getting it through?
Well, this is also the challenge for von der Leyen, the head of the European Commission, who was also very criticized at the start for being almost overwhelmed by this crisis. And she definitely got a break yesterday by being able to get this deal done in a summit. I know we talk about 5 days, but if you look at the European standards, this was actually a quick deal. Now, the European Parliament have always said they want to look at the details. They wanted a big agreement. Clearly, that's been watered down. But at this point, it's very clear they're not going to derail anything that could put this plan at danger. So it's almost a given that they're going to vote this through and that this deal is going to go through. It's I would say it's very unlikely that the European Parliament, the MEP, would say we're going to vote it down. It's very, very unlikely.
Does it mean that we're going to go towards more fiscal integration, or is this a one-off like many countries, especially the northern ones, are at pains to remind us?
Well, Francine, it really depends who you ask. When you speak to French officials, they tell you something very magical.
Hi there, if you'd like to create a brand account or brand channel so that you can have more flexibility.
Today, and the fact that the Frugals, they argue, have lost Frankfurt, the ECB.
Hi there, if you'd like to create a brand account or brand channel so that you can have more
When you speak to some German officials and, of course, the Frugals, they'll tell you just take this with a pinch of salt. We know that this was an unprecedented crisis. This was a black swan. No one could have predicted this was going to happen, and this pandemic really is an extraordinary event. It doesn't mean that this is the way forward, but again, every camp would want to spin this their own way.
Maria Tadeo, thank you so much, and thank you for your reporting over the last number of days in.
Short position opened on euro against United States dollar at 114.435.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, let's talk about the economics of the recovery deal that we spent quite a lot of time on this morning. We're now joined by Ian Shepherdson, Pantheon Macroeconomics chief economist. Ian, we have a deal. After 4 days and 4 brutal nights, the leaders finally came to some kind of agreement, which is maybe better than some people are expecting, but in a lot of facets also worse, with key components being dropped or abandoned. What does it actually mean for the money that the countries receive? Will it be enough to see them through this tough period?
Well, the answer to all these questions is it depends. If we assume that there's going to be a COVID vaccine over the next 3 to 6 months, and obviously the news is pretty good, then that ought to provide a solid floor from which the economies can grow more quickly, and this money will make a material difference. If there's not a successful COVID vaccine, then it's nowhere near enough. It's kind of that simple. I mean, the amount in total is just over 4% of Eurozone GDP, spread over 3 years. So it's not a bazooka. It's assistance, and it's substantial assistance. I don't want to downplay it, and obviously the politics of it is hugely positive. But without a successful, sustained containment of the COVID, then it isn't enough. If we have that, then yeah, it's gonna make a material difference.
Okay, so what does it show us? Does it show us that there's going to be more integration for Europe, or is this just a one-off?
Well, I hope it's not a one-off. I mean, they've crossed several Rubicons here, and as we know, crossing Rubicons, you tend not to turn around and go back again. So I am hopeful that this does mark a real shift in Europe's willingness to act more like a fiscal union. Of course, it isn't a true fiscal union, but it's a huge step in the right direction, allowing the Commission centrally to use its AAA rating to borrow money on a long-term basis. I mean, most of this money is going to be bonds expiring in 2058. So this is a demonstration, if you like. It's kind of a proof of concept of things that economists have been talking about for a very long time, that the EU has financial muscle as a unit, as opposed to simply being a collection of individual countries. So I'm encouraged, but we need to see more.
Ian, there's a basic understanding, folks, not official, that NBER, which figures out American recessions, says we're out of recession. We'll see on that in the coming weeks and months. Ian Shepherdson, is Europe still in recession?
That's a very good question. It depends how you define a recession. If you're only looking at rates of change of economic activity, it's probably out of recession because the European economy, as of right now, is probably growing. But if you define it in terms of where we are relative to before the COVID, then no, it's hugely depressed. Unemployment is massively elevated. The level of GDP, the level of all economic indicators is much lower than it was before the COVID struck. So to the person in the street who's thinking about chance of getting a job or the kid getting a job, then Europe unquestionably is still in recession.
Ian, what's so important here, and we've heard it from a number of people today, is a multiplier effect, which I think everybody understands. The multiplier effect in Europe, the multiplier effect in the United States of phase 4, 5, 6 stimulus that we're going to get, do multiplier effects work given a natural disaster?
It depends what you do with it. I mean, some things, like the one-time stimulus payments in the US, I think have a very limited multiplier effect. But if countries use the money to think a bit further ahead and maybe do some infrastructure type stuff, that can have a very long-lasting multiplier effect. And you don't need to tell you, Tom, that US infrastructure could do with a bit of a lick of paint and more. Europe is in a slightly different position, though the infrastructure requirements vary massively across countries. There's a lot more to do in the south than there is to do in Germany, for example. But generally speaking, those sort of long-term projects, together with short-term relief to provide cash to households at the period of maximum need, is the best way to go about it. So now that we've kind of reached a position where we can sort of take a bit of a deep breath and look around rather than the immediate crisis that we faced in March and April, I'd like to see some of these packages being structured in a way that provides short-term benefits, but also does think ahead, looks up and thinks about the future, and recognizes that the infrastructure requirement really, especially in the US, is enormous. So fingers crossed we get some of that, but I'm not hearing very much out of it from Washington at the moment.
But Ian, if you look at infrastructure, programs in the U.S., first of all, I know Tom used to say that it's a lot of the airports that probably need redoing. Not the great time given what air and travel are doing. But is there a timeline problem that these projects take a huge time to get approved and actually get built up, and we're facing a more immediate crisis?
Yeah, absolutely. The myth of shovel-ready is quite pervasive. There's not very much infrastructure spending that can be switched on in the sort of time frame that's required when you face a massive, completely unanticipated shock like COVID. But that's not a reason to ignore it. It's not a reason not to do it. It's a reason to do lots of other short-term stuff at the same time, but to use this historic opportunity provided by extraordinarily low borrowing costs for governments everywhere, to think about borrowing money to put people to work in the longer term and to improve future productivity growth, because that's what infrastructure's all about. And sure, adding airport capacity right now isn't a great idea, but rail capacity in the US, for example, or the rebuilding of the interstate highway system, there's a ton of stuff that needs to be done. Trillions of dollars worth that's already been identified by civil engineers. So you can do both.
I'm pleased to report to you, Dr. Shepherdson, that the paving of Fifth Avenue continues. Fifth Avenue right now in New York is like a billiard table. It's a gorgeosity of it. Ian Shepherdson, thank you so much, with Pantheon Macroeconomics. Coming up later, this will be a timely interview in the 8 o'clock hour. Really looking forward to this. The gentleman from Maryland, he is always interesting. This, of course, about the fiscal dynamics of Washington. Stay with us. This is Bloomberg Futures Up 23.
true diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
None of us are safe until all of us are safe. We need to have a global approach into handling and fighting COVID-19, a global pandemic. Part of this, of course, finding an effective vaccine.
Good morning, everyone. Bloomberg Surveillance. Francine Lacroix in London. I'm Tom Keene in New York. Ian Shepherdson with us, of course, with a nice U.S. feel to their coverage with Pantheon Macroeconomics. I would suggest, Ian, that an awfully important date is October 29. That is when we get third quarter GDP, the first look of third quarter GDP just before the election in America. What kind of report is that going to be for Mr. Biden, for Mr. Trump?
Well, it's going to be different to what I was expecting just maybe a couple of months ago, when I was kind of quite happy with the idea that the virus was contained and that we'd get a sustained takeoff and a really big third quarter GDP number to recover quite a lot of the ground that was lost in the second quarter. So I was thinking maybe 30 or 40% annualized growth. Now, unfortunately, with the slowdown that's evident across a big range of states where we've got the second wave, unfortunately, I'm thinking more like a 15. So that's still a big number, and I'm sure the administration will say it's the best GDP number ever, and it might well be, but it will recover not very much of the loss that we've suffered in the second quarter. So the spin will be difficult.
When I looked at the Johns Hopkins FT numbers today, I was thunderstruck by the continued difficulties in Florida, in Texas, in mental block, right, California. Can you sum those three states together to 90 million people? Is it appropriate in America to take three states and glue them together as sort of a mini aggregate economy?
Yeah, in this context, you know, it really is, because those states all have very similar patterns. If you look at things like small business employment, if you look at the restaurant diner numbers from Open Table, you know, we get a pretty consistent picture that people began to retreat in the face of the second virus wave back in late June. Now, the good news is that as long as people stay retreated, then we should see a turn in the virus numbers in those states within the next week or so, as we've already seen in Arizona, because Arizona was the first state to retreat. And so right now, you know, thinking about these real-time data, because you know they're all we've got to work with, I think it's quite likely that activity in those states is flat or falling a little bit, but it's being offset to some extent by rising activity in the Northeast, which is not having a second wave. So we've got a kind of a bifurcation across the country where a lot of southern and western states are really suffering, having initially recovered more quickly because they didn't do a full lockdown and then they reopened more aggressively. So it's been a real sort of you know, tortoise and the hare situation, where the Northeast had a much more aggressive and a much longer lockdown and has released things very, very slowly, but successfully. And I think I'd be willing to compare most of the Northeast to most of Europe, where the easing of restrictions hasn't resulted in a horrific second wave. There's localized outbreaks, but nothing worse than that. Whereas in the South, because it wasn't taken seriously enough in the first place, and I think there was a big expectation that the summer would make it go away with the heat. That turned out to be wrong. That, plus complacency, plus political obstructionism against things like mask wearing, really has generated this awful situation in the South and the West. And so, yeah, I'm looking at those states as kind of a block, as a drag on economic growth, which otherwise I was expecting would have been spectacular in the third quarter. It's a real tragedy, and I think it probably delays things now until maybe September.
Ian, we heard from Joe Biden, you know, unveiling the $775 billion plan to bolster childcare, but also care for the elderly that would be financed by tax on real estate investors with income, I think, more than $400,000. But in general, do we have now a clearer picture of what the economy would look like under President Biden compared to under President Trump?
Well, everything starts with the virus. So kind of the first question is, what would the virus look like under Biden than Trump? Because that really determines everything. And my guess is that the Biden administration would have been much more aggressive in terms of actually using data and science and applying much more stringent public health measures. But we are where we are now. So I think Biden, if he becomes president in January, will inherit a recovering economy, because I think, though, if not all vaccinated by then, I think vaccination will have started. And of course, there's been a huge amount of learning of the experience of the last few months. So he'll start from a better place. I don't expect him to impose anything that look like a net fiscal tightening. A lot of people in markets are worried about tax increases, but I don't expect a net tightening. There'll be a redistribution, that's for sure, but not a net tightening. And of course, the Fed will remain extremely accommodative.
Ian, thank you so much. Ian Shepherd's there of Pantheon Macroeconomics. This is Bloomberg.
Everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Rishika Gupta. Let's get the Bloomberg First Word News. The European Union leaders have agreed on a landmark $860 billion plan to rescue economies hit hard by the coronavirus. It's built around a first half for the bloc, hundreds of billions of dollars of common debt. The emergency fund is almost equally split between grants and low-interest loans. Italy is likely to be the biggest beneficiary. It was the original European epicenter of the pandemic. Joe Biden has unveiled a $775 billion plan to improve childcare and care for the elderly. It would be paid for in part by taxes on real estate investors with incomes of more than $400,000. The Democratic presidential candidate also would increase tax compliance by high-income earners. President Trump is sending federal law enforcement agents to Chicago, and he warns he could have them patrolling other major cities as well. All of those cities are controlled by the Dems. Camouflaged agents have already been criticized for firing tear gas at demonstrators in Portland, Oregon. Governors and other elected officials compared the president's actions to authoritarianism. And the richest person in the world just got a whole lot richer. Amazon CEO Jeff Bezos added $13 billion to his fortune yesterday. It's the largest single-day jump for an individual since the Bloomberg Billionaires Index was created in 2012. Give the credit to Amazon, whose shares rose almost 8%. Bezos' fortune is now worth more than $189 billion. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom Francine.
Ritika, thanks so much. The Nutcracker, the ballet, is two-act play. There is no question stimulus in Washington will be much, much more than a two-act play. It began yesterday. Here is the Treasury Secretary.
We've spent an unprecedented amount of money. The good news is a lot of the $3 trillion we still have left to put in the economy and put back to work. We're focused on starting with another $1 trillion. We think that will make a big impact. And the focus is, as I said, is really about kids and jobs and vaccines.
The Treasury Secretary with Vice President Pence starting the ball forward today. Right now, our chief Washington correspondent and ballet aficionado, Kevin Cirilli, joins us this morning. Kevin, it will be a ballet, and the ballet begins at lunch today. Senate Republicans and various White House authorities. All that's great. I want you to go over for our audience now, what are the consequences for the two parties if they don't get this stimulus done? No one's talking about that.
They're going to get voted out of office. I mean, look, there's a lot of pressure. We talk about the Republicans a lot, but for Democrats even to play ball, Democrats who are in more moderate swing districts, to play ball and to deliver here, just as much as pressure on Republicans.
I don't mean to cut you off, but we spoke yesterday with Don Beyer, who you know well from Virginia. Yeah. Great guy, small business guy, great conversation. Does Pelosi care, does the Speaker of the House care more about Congressman Beyer or the liberals that are screaming at Joe Biden?
She cares if she wants a majority. She cares if she wants for the party to have a shot at taking back the Senate. Granted, I know she's in the House, but I mean, in terms of Democrats having momentum to really spread their majority here, she's going to care about someone like a Don Beyer. Because here's why. You know, when you talk about the first round of stimulus, and Secretary Mnuchin framing it yesterday as schools or as kids, as stimulus money, and of course vaccinations, that's really where the pressure is coming. Leader McConnell wants to represent the business community in the sense that he's pushing for there to be some liability protections. Speaker Pelosi is saying, you know, we need some more cash for families, cash for some underfunded communities. But President Trump's saying, essentially, and I'm paraphrasing, he wants to see a payroll tax cut, but even more pressure, he wants there to get to a deal. So if you're outside of Washington and you're trying to price this, or you're trying to gauge the actual probability of this getting over the finish line, expect there to be an inflection point sometime in the early days of August, but ultimately there might be some political theater, but the expectation baked in Washington is that it gets done.
Kevin, when you look at the Joe Biden plan that he put forward, what are people saying about it? Is it enough? Is it well thought out? Is it too to the left?
Well, so Republicans are saying that it's too progressive. However, in Democratic circles, this was a very, very strategic rollout. The advisors that have worked closely, I'm told, based upon my own reporting, with the former vice president's team are folks from the Obama administration who, quite frankly, were seen as more centrist, more pragmatic progressives in terms of crafting this particular economic plan. Beyond that, from an environmental standpoint, that is where the former vice president has chosen to adopt a more progressive outlook. However, I want to be careful here, because I spoke with one senior source on the Biden campaign who said that they are doing this in lockstep with the unions. So on an issue like fracking, for example, in Pennsylvania and Ohio, to some extent, he has that in mind.
Kevin, it sounds like Brussels. Kevin, you just mentioned August. Do they have the luxury of getting to August? I mean, the jobs report is August 7th. Maybe it'll be just under 10% unemployment. Come on, we're like barely out of recession. Do these politicians have the luxury of waiting for August?
Well, I don't think we're out of the recession. No, they don't. They don't, because the clock's ticking down and millions of families across America are going to have their unemployment benefits expired. And I mean, you know, even the developments of the vaccinations aren't enough optimism injected into the culture right now.
This is a great conversation. Kevin Cirilli, thank you so much. Folks, this is really important. On the calendar is the Senate Republicans' lunch with the White House today. Coming up, this is a really important conversation. The gentleman from Miami-Dade County, what a mouthful. He's the mayor of Miami. Come on, Carlos Jimenez. This is really, really a timely conversation. The statistics in Florida are just flat out grim. Stay with us through the morning. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, Tom, as we continue to track the virus, Bloomberg has developed this unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response, and every day we bring you insight from experts in public health, infectious disease, and emergency preparedness. Joining us now is Carla Freeman, Johns Hopkins Executive Director of Foreign Policy Institute and Associate Research Professor of China Studies. Professor Freeman, thank you for joining us. We spent a lot of time looking at some of the vaccine trials or some of the preliminary results in these trials of Western companies. What's going on in China? How far advanced are they in finding a solution for COVID-19?
It's all hands on deck for the Chinese in looking for a vaccine. And in fact, there are some exciting trials that have been reported. Most recently, one with that looks like it has it could produce a vaccine fairly soon. I think it's CanSino Biologics is one, but they're in a race against because this is an international competition now between. They're in a race with a UK company and also Pfizer, and a German company also are in the process of producing a potentially promising vaccine.
Do we know how, I mean, China has handled COVID-19 differently to a lot of Western countries. What do we know that has worked there and that we could do here?
China went after and some initial fumbles that have had regrettably global implications. China put an entire province effectively on lockdown and enforced very stringent measures to quarantine its citizens, with the result that it kept rates down. They are increasing a little bit, but we're talking, I think, fewer than 24 cases in China right now, compared to the incredible surge in cases in the United States and indeed elsewhere in the region. Some of the places that were models are now seeing a third wave. Hong Kong, for example, has recently seen its cases rise as well.
Carla, from Johns Hopkins, is the general sense here that this crisis has diminished the Communist Party in China, or is it actually been an opportunity for them? Is it enhanced their position?
That's something we're still debating. I think we're wondering. A lot of the lockdown measures have been enforced in part with increased uses of technology, and we're not sure how that will play out in the long run. I think President Xi and the Communist Party faced an uphill battle after the initial handling of the virus, but now as the Chinese look around the world at different responses by different governments, I think in fact within China that has strengthened the Communist Party's position.
You are truly expert on this. Do we know the quality of our intelligence on China? I mean, we're obviously getting a managed message out of their different news agencies and even their scientific community, but do we have good intelligence on the ground in China?
I think we always have to wonder about the quality of our information, and regrettably, in recent years, we've seen a number of, and in fact, very recently in particular, we've seen the number of international reporters limited, including U.S. reporters, some of whom provided very, very high quality reporting out of China, and so you know, it's really in the past it was quite easy to do field work in China, and there was a lot of great data coming out of China. I think all researchers around the world are going to have to reevaluate how we do research with China, but I think that's where partnerships with Chinese universities and so forth will become important. It's a difficult political issue, though, for societies that find many of China's current political practices anathema.
How will it change the way that we deal with the next pandemic when and if it hits us?
I'm not sure who we is, but I think we're going to have to recognize that this is probably not exactly the new normal, but we certainly are going to face other transnational challenges. And my hope, you know, personally, is that we will work together collectively at the global level. This time around, we didn't do that. The bilateral tensions between the U.S. and China have been a major factor in that, and frankly, the bungled American response has been as well, because normally the world looks to U.S. leadership, and in this case, we have not delivered. So I hope there'll be some post-pandemic reassessment around the world, and so we will have better quality systems in place in the future.
Thank you so much, Carla Freeman there of Johns Hopkins. Be sure to check out VRUS Go on the Bloomberg for the latest information, and tune in every day for our conversations with Johns Hopkins experts. Now, coming up, we speak to Commissioner Gentiloni on this EU Recovery Fund. This is Bloomberg.
opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacroix.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. Tom and Francine from London and New York. This is the day after European Union leaders agreed on this unprecedented stimulus package with 750 billion euros. Well, we are delighted to be joined now by Paolo Gentiloni. He's the EU Commissioner for Economic and Financial Affairs, and he's been keeping us abreast of a lot of these situations throughout the last couple of weeks. And Commissioner, you were always optimistic that a deal would be reached. Is it the right deal, or is this deal enough?
It is the right deal, and it showed that, yes, we have divisions, but Europe is stronger than our divisions. So something unprecedented will happen in the next 2 or 3 years. The European Commission will raise hundreds of billions of euros in the markets and distribute them in grants and loans to member states. And this is really something changing the perspective of our solidarity in the Union.
Commissioner, when will countries actually see disbursements from the fund?
Well, countries that will reach the higher level of disbursement will be the more affected countries. And the timing will be next year. We need time for final approval from national parliament, and we need time to raise in the markets this amount of money, and we need time to have plans from member states that should be coordinated and towards our strategic priorities. We can't spend this huge amount of money without having a more competitive and more sustainable European economy.
The recovery fund will be financed by 750 billion euros in jointly issued bonds. Is this the first step towards a safe euro asset?
Well, it is not the decision that was taken today, honestly. Indeed, today, several member states stressed the fact that this is really extraordinary and it is linked to the emergency that we are facing, and I think we have to stay to this decision. Then in the future, I think that if this solidarity will work and if we will have good result from this common issuing in the markets, I think this will be an experience to be used also from the Union in the future. But it is not the decision we are taking today.
Commissioner, I understand there's a lot of cause for celebration, and Europhiles are happy that the continent's staying together and that it came to an agreement. But are you concerned that more than 50 billion euros will be paid out to fiscal hawks in budget rebates in order to get them to sign this agreement?
Well, I could not remember how many compromises were necessary in these 4 or 5 days to reach the agreement. So you are mentioning one of them, and rightly so, the one on the so-called rebates. Unfortunately, we had also cuts to the multi-annual financial budget. But all in all, I think that 6 months ago, the very idea of the European Commission managing a financial tool of 750 billion, which is adding to another one that is called SURE, that is 100 billion euros, and distributing this amount of money to member states would have been considered completely crazy. So yes, we had compromises to reach the deal, but the deal is really extraordinary.
So the compromises were worth it? I know there were also compromises on, for example, the investment for climate change, the rule of law linkage to the EU budget. It was abandoned. Is there any chance that the Parliament is actually not happy with this deal?
Well, I think that discussion with the Parliament will be essential because the Parliament criticism is in several of these compromises fully justified, but also I think we need the support of the Parliament to go forward. As far as the investment are concerned, yes, we have cuts in some investment programs, but at the same time, huge part of this enormous amount of common money will be targeted for investment. So all in all, investment will grow, and especially investment for the Green Deal and the digital transition.
So as we go through the numbers, I think that the fiscal transfer will be of about 0.7 or 0.5% of GDP, but below 1% of GDP in terms of fiscal transfers. Do you think it'll be enough overall to deal with the kind of crisis that we're facing?
Well, until now we had 4% of GDP in expenditures from member states. And even 25% of GDP in guarantees and liquidity measures from member states. This is something completely different and new because it is common money addressed to countries and realities in deeper difficulty, and common money to support our strategic priorities. So the commitment of member states and the European commitment are combining themselves to have, I think, a strong recovery. So this percentage of common initiative is adding up to a strong member state initiative, but it is absolutely crucial to avoid differences among different parts of Europe more or less affected by the pandemic.
Commissioner, do you think that this fund will actually deactivate some of the Euroscepticism that we've seen in certain European countries?
I do think so, because the message of this initiative is that in front of this pandemic crisis, you can't have winners and losers, and you should react as a community. And this is also a message of Europe protecting its citizens. And it is absolutely what is needed to weaken the Euroscepticism and the nationalistic positions in member states.
Mr. Paolo Gentiloni, thank you so much, as always, for giving us a little bit of your time on Bloomberg TV. He's the EU Commissioner for Economic and Financial Affairs after this landmark deal that was reached by European Union leaders. Now, we're also getting a bit of earnings. Actually, Coca-Cola second quarter comparable earnings per share came in better than expected, I think. So let me give you the exact numbers. 42 cents instead of the 40 estimated. So that's better than expected for Coca-Cola. Later on, 4 p.m. London time, we'll be speaking to the chief executive of Coca-Cola as well. Markets moving sideways, but are a bit optimistic because of this EU clinching this massive stimulus deal. Coming up, join Tom Keene, Jonathan Ferro, and Lisa Abramovitz for more Bloomberg surveillance, this time simulcast on Bloomberg Radio. This is Bloomberg.
Stop on profit for euro at 114.415. Stop on profit at 114.415.
Because the downtown is beginning to reopen, some businesses are still shut down and others are open, so they're alternating days of the week in which they can open. There are a lot of people wearing masks, almost everyone is. The city also tried implementing a rule that would limit the flow of people to downtown. Mexicans are being very cautious.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
There's going to be a lot more unemployment coming, and certainly a shift from what was temporary unemployment into permanent to some degree.
These companies are now starting to hunker down for a longer, more protracted recovery. And so they have to right-size their businesses.
Not everything's going to turn on right away, and we're finding out some things that were turned on and be turned back off for a little while. It's going to be bumpy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance with equity futures rallying. We're live on Bloomberg TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. A landmark deal in Brussels, Belgium, Europe, Tom Keene. It could be the first step in an important road towards fiscal integration. Will this be the moment that we look back on as history in the making for the continent?
I agree with you. Over 62, 63 years, John, this is a real moment. For our American audience on radio and television, we really can't underestimate the size of this deal. But, John, what I have learned in the last 24 hours, it's the only beginning process. And frankly, I spent a lot of time with Wolfgang Munchau trying to stagger to Strasbourg in the European Parliament.
Some important steps still to come, Tom, though we've said repeatedly over the last week, the signal is more important than the size. And Lisa, the signal right here is important. Europe is demonstrating they can borrow at the European level and distribute grants accordingly. That was unthinkable 10 years ago.
And not just that, but they're also putting in certain taxation powers that also give it more of a federation kind of feel. So Europe has gotten its act together. How about the United States? Today we're going to be hearing potentially results from Treasury Secretary Steven Mnuchin and House Speaker Nancy Pelosi. They're going to be discussing the $1 trillion proposal that Mnuchin came to with the White House. This potentially will include payroll tax cuts as well as potentially no state aid, which is going to be a problem for the Democrats. 2 p.m., the Senate Banking Committee convenes on Christopher Waller and Judy Shelton's nominations to the Federal Reserve Board. This comes 5 months after their initial appearance. And then also after market, we're going to be seeing the tale of two markets, United Air and Snap, both reporting earnings. United Air in a world of hurt. Snap at the forefront of big tech's prowess so far this year, John.
Lisa Abravis, thank you very much. Looking at the fixed income market, the bond market doing okay. The FX market, a euro that's slightly weaker with euro dollar at 114.40. Tom Keene, all about Europe this morning. It's about fiscal authorities in the United States a little bit later. It took a crisis to get the ECB to act like a normal central bank. In fact, it took 2 crises in Europe to make that happen. It's taken an unprecedented crisis on the continent to get fiscal authorities to come together in a way that was unthinkable 10 years ago, Tom.
John, I think that's totally correct. And the question is, does it take another crisis to move forward to the United States of Europe? But what we heard in every conversation this morning, John, is the idea of this is not that big a deal given all the negotiations, taking this away, taking that away, etc. But John, as you well know, the sideshow here is the power between the West and the East in Europe, which is almost foreign policy.
Tom, you've got to remember this, that in Europe, things take a long, long time to build. When they had the coal and steel community in the 1950s, no one thought that ultimately that could become the single market. When they had the single market in the late 80s and laid the foundations for that to happen, Tom, no one thought that that would become the Eurozone and a monetary union. At least they didn't think it could happen as quickly as it did. And I don't think this is the moment where we change overnight. This is the foundation to build something in the future.
And the other thing here, of course, is the backdrop, as Lisa mentions, John, of the U.S. debate. Lunch at the White House today of Senate Republicans. And, you know, I'll be honest, there's some similarities to what's going on in Europe. They need a lot of money now because this economy isn't going. And as Kevin Cirilli said, John, I don't understand how we wait until August in the U.S.
Well, there's a key difference here, Tom, and I think it is a crucial one as well. For the United States, whatever they agree in the next couple of weeks, that money will be deployed very quickly. In Europe, that's not the case. We heard from the Commissioner just coming into this program, into this hour, Tom, that it's going to take a long, long time for Europe to ratify the deal that's been agreed at the leader level. Then it will take a while to raise the money, and then they will finally disperse the goods. In the United States, if we get an agreement in the next couple of weeks, Tom, if we agree to say, let's just say, more checks for Americans, they can get that out pretty quickly. Europe is still going to move slowly on this.
I know Greg Valliere publishing this morning that more checks for Americans is certain within this agreement. The price point, John, you know, right now I'd say it's $1.5 billion, coming down from that Democrat Party $3 billion statistic.
I think we've got Peter Cheer with us of Academy Securities, so let's bring him in. Peter Cheer, an historic moment for the continent. It is about signal, not size. How transformational for the continent do you think this is?
I think this is great news. I like it a lot. I think, you know, Europe offers some value on the market side of things as well, that stocks have not performed as well. Like you say, these things take time, and getting this first wave through should open the door for more going forward. We've been waiting for this for, you know, you said a decade. So I think it's really good that this is happening. I think it's interesting. And a lot of times American markets seem to ignore these, you know, quote unquote transformational moments in Europe. I think this will gain momentum and gather strength as people stop focusing on the size of the deal and on the fact that there is a deal.
Peter, take this international relations and fold it over to your study of the bond market. What's it mean? What's it signal?
Sadly, I think not a whole lot for the bond market. I think we are going to see more of the same where, the 10-year Treasury has been stuck in a very, very narrow range, and it's a function of how the Fed is going to respond. The Fed is going to be quick to add stimulus. They'll be slow to remove it. We do not want negative rates, so that means yields can't go much lower at the front end, and we will likely see yield curve control or more Fed buying of treasuries if necessary. We're stuck in this very narrow and kind of boring range on Treasury side of things.
All right, so it might be boring on the Treasury side of things, but just sticking in Europe, we're talking about how this fiscal plan isn't going to be implemented until next year. That said, it has suppressed yields in some of the most needy areas, in particular Italy, with Italian bond yields going down to the lowest since early March. Do you think that there are further gains here on Italian bonds, that potentially yields could go lower, given the backstop that we're getting from fiscal as well as monetary policymakers in Europe?
Yeah, I think you're going to see more and more of that yield compression. You're going to see maybe Germany give up a little bit of their negative yield over time. Again, Germany and the Bund really had two components, right? If people weren't buying it for the safety of Germany, there was almost this free option that if they ever went back to the Deutschmark, the Bunds would do it phenomenally well. As that gets taken off the table, I would look for more yield compression. So I think that's going to be a big trade for a lot of hedge funds.
Tom, Peter Cheer mentioning something important here. If you go back to 2012 and the July 26 speech, the Bumblebee speech from the former ECB President Mario Draghi, it took a while for people to realize what had actually happened. At the time, people read that speech, heard that speech, and thought, okay, what's he going to do? And it wasn't until several weeks into August where I think the penny finally dropped, Tom. And I wonder if we have a similar, perhaps more slow-moving story on the fiscal side as well, that it takes time to digest the process, quite what is happening on the continent.
No, there's no question about it. An historic moment, John. I give you great credit for being out front on the true scale of this. Again, folks, this spans over 60 years coming out of World War II. But I would bring it right back to the U.S., John, in that the fiscal immediacy is extraordinary. I mean, you and I, John and Lisa, we're all folded in. I know Peter's living out on Long Island Large, but, the three of us are living within 3 zip codes within New York City. That's not America. Every report I have, John, is America flat on its back, in Europe flat on its back. These people have to do something now.
There's a lot of pain in the labor market, Peter Cheer, and we still need a lot of assistance from Washington, D.C. and the federal government. There is a $2 trillion spread between Democrats and Republicans. Nancy Pelosi, Speaker of the House, meeting with the Treasury Secretary Steve Mnuchin later today. What are you looking for from those talks?
Sadly, I think we're going to see a little bit of disappointment. The market seems very convinced that both sides are going to come to some agreement. When you start looking at the details of the plans, they have a lot of dramatic differences in what they're looking for. And given where the stock market is, given some of the economic data is turned around, given some of the complaints about the deficit, I think we could see a lot more friction out of D.C. than the market's expecting. So I think we're going to get a little bit of a wobble in the market this week as talks start and people realize they're further apart than we would like towards a deal.
So meanwhile, that's Congress. What about the Federal Reserve? Some people saying that perhaps the market has overestimated the Fed's backstop of markets, given the fact that their balance sheet has plateaued and even declined a bit over the past few weeks.
Yeah, I think people have been overestimating the impact of the Fed. I think a lot of the bears, as we saw this rally start, said, oh, this is all the Fed, this is all the Fed. And to me, it was really all DC, it was all the stimulus. I think the Fed's supportive. They've been very involved in the rates market. I don't think they have to do much right now because they've sent such strong messaging. They've helped on the corporate credit market. But I think what they've done right now is more test the plumbing so that if we get another problem in the markets, they can react more quickly and more aggressively. But I think we're going to plateau on some of the things, and you can maybe fight the Fed a little bit in the U.S.
Peter, one final question. I want you to go outside your remit. What do you think of the equity market? I mean, I've got 18 opinions, but you're like wicked duration, maturity, all the Greek letters, the fancy pants fixed income stuff. What do you make of the market with a VIX at 24.19?
It has been an incredibly confusing market. I think Lisa used the term earlier, and we've been talking about this, the tale of two markets. You have so few stocks driving it. I actually liked Friday where you saw big tech lose a little bit and you saw the Russell 2000 things do well. And yesterday we reverted right back to the same stocks driving the entire market. And to me, I talk a lot about this, and I've seen it in the past. Stock prices just become a number. We've lost sight of valuations. We've lost sight of market cap, and everything's trading as though it's a number. Where to trade last? Where's it going to trade next? And I think that is actually going to break. And the only times I've seen that were 2007, 8, when the last, rallies in the credit market. It reminds me a bit of what we saw in 2000. So I'm very nervous, and I don't like the trading patterns.
Peter Chair, a conversation we've got to continue. Joining us from Academy Securities, Peter, thank you. Tech, absolutely massive in the last 24 hours. Tom Keene, I'd go further. It's not just a number now and not a valuation. It's a story. We're all being told this nice story about these big tech names and why they can keep heading north.
Yeah, but John, that's true. But when the moment they pause and we go over to small caps for one cup of coffee, we've got this back and forth and back and forth. And I love what Mike Wilson said here. We need to identify when they all get together. We're nowhere near that right now.
Well, Lisa's Mike's message over at Morgan Stanley is that if we can break things down a little bit on the tech side, get some consolidation, then we can rally as a group. Cyclicals, growth, value, all together. That's the story. But looking at the performance we've seen in tech has just been unbelievable. Nasdaq 100, Lisa, up 25% year to date. Amazon up 70%. Apple and Microsoft up around 35% in 2020.
It's incredible. IBM's results yesterday after the bell confirming some of this with the cloud growth. I will just give you this from Sarah Ponczak of Bloomberg. That yesterday the Nasdaq was up 2.9%. Equal weights S&P down 0.5%. The last time that happened, 2001.
It has been a while. Much more to come on those numbers a little bit later in the program. Equity futures up 22 on the S&P. We advanced 0.7%. Down in Washington, we might have a new Fed governor. A little bit of controversy there. Senator Chris Van Hollen of Maryland on the Senate Banking Committee will get his thoughts on whether Judy Shelton should be confirmed. That later from New York. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. It's a done deal. European Union leaders have agreed on a landmark $860 billion economic recovery fund. The fund is split almost equally between grants and low-interest loans. It will unleash vital financial aid to the southern European economies hit hardest by the coronavirus. And it's being paid for by hundreds of billions of dollars of common debt. That's the first time the EU has done that. President Trump's controversial pick to join the Federal Reserve Board is set to clear a key hurdle. Louisiana Senator John Kennedy says he'll back Judy Shelton's nomination in a vote today in the Senate Banking Committee. The full Senate would still have to vote on Shelton. In the UK, there's more pressure on Prime Minister Boris Johnson to take a harder line on China. Today, US Secretary of State Michael Pompeo meets with senior members of Parliament. Those lawmakers want to see sanctions on China. They also want China cut from the UK's nuclear power program. And eBay has ended one of the biggest auctions of the year. It's agreed to sell its online classifieds business to Adevinta for $9.2 billion. eBay will get $2.5 billion of cash and 540 million shares in the Norwegian firm. eBay has been under pressure from activist investors Starboard Value and Elliott Management to sell assets. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The Nissan Ariya is the one that represents for the Nissan new chapter. I would say that the Nissan has a great experience because we have 10 years of the history through the Nissan Leaf. We have learned a lot of the voice from the customer.
It's a tremendous saving, and I think it's an incentive for companies to hire their workers back and to keep their workers. The payroll tax cut to me is very important. We're working on it. And I don't think there's too much dispute as to the level of importance.
The President of the United States would like a payroll tax cut from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. 2 hours and 12 minutes away from the opening bell. Equity futures adding to the rally. We add some weight to the S&P 500, up another 23 points on the S&P. We advance 0.7%. In the bond market, yields bleed higher by a single basis point to 0.62%. We have a deal in Brussels. The euro not doing much. We come down 1/10. Euro dollar 114.35. As we tidy things up on the continent, Tom, still some work to do. We'll catch up with Maria Tadeo a little bit later in the program. It is about what happens here on the other side of the Atlantic now. Can we get that spread down from $2 trillion and find an agreement between Democrats and Republicans?
Well, stimulus here, stimulus everywhere, John, and part of that is a political panic that we move towards depending on what the election is. Mr. Rutte of the Netherlands, of course, he's got to go back to the Netherlands after this historic agreement. Mr. Trump, of course, has a ballet to play with Mr. Biden. Kevin Cirilli is our chief Washington correspondent. Kevin, I want you to color the level of panic among Republicans right now. In a couple days, it's 100 days to the election. What's the mixture, the level, the nuance of panic in the GOP?
They're essentially saying, what's the plan here? You know, how are they going to get back on offense? Because, you know, I mean, when you look at polls, whether it's in Texas, whether it's in Iowa, and not just presidential polls, but also down ballot races polls, you know, the Senate race in Iowa, some suburban districts in Texas, polls suggest that it's Democrats are really inching forward and in some cases pulling ahead, but it's still incredibly early. It was just a few months ago when Republicans had momentum. There's really no political strategist that I talk with now who doesn't acknowledge that Democrats seem to have been having, to put it bluntly, a very good summer. But as the Biden campaign continues to roll out their economic vision, here in Washington, D.C., the talk is all about the next round of economic stimulus.
Kevin, to see the senator from Texas, Ted Cruz, start to panic, that's what it looked like in the last 24 hours. Can you speak to that, how important that moment is and what it means for policy in Washington?
Well, Texas has always been the foundation, really, in many ways, of the conservative movement, especially given its history with the Bush contingency of the Republican Party. For Senator Ted Cruz, a Republican from Texas, who, mind you, Jonathan, just beat Beto O'Rourke in that very contentious Senate re-election campaign. Beto, of course, ultimately launching a failed presidential run. But he knows a thing or two about how Democrats are turning out to vote in the state of Texas. So for him to go on Fox and to say that is very, very crystal clear that they feel that they've got to make sure that not only they're turning out the base, but winning some key swing voters in a red state, traditionally red state like Texas.
Kevin, how much is that panic bleeding over to the White House, especially with President Trump coming out yesterday afternoon with a Twitter post of him wearing a mask and saying it is patriotic to wear a mask, a sharp reversal in his stance, Kevin?
Massive reversal, you know, and look, I mean, today the president is going to continue with his daily coronavirus task force briefings. Lisa, this has been at the urging of some of his senior political advisors who feel that he has lost politically the opportunity to directly talk to the American people. People like Kellyanne Conway really pushing for him to do that, as well as his chief of staff, Mark Meadows. I think in the next month, you know, there's this expectation that the next round of economic stimulus will get done. The question from a political standpoint, divorcing the issue of the economy for a second, is can the president create a scenario where he is able to claim victory for an inevitable passing of this stimulus? That's the strategy at 1600 Pennsylvania Avenue.
Kevin, Senator Van Hollen is scheduled to be with us today from the good state of Maryland. And of course, that is the land of Spiro T. Agnew. And it is also the land, I would suggest, with Pat Buchanan, the coining of the phrase silent majority. Help our audience across America and worldwide with the new silent majority. Who are those guys?
There was a brilliant article last week on the Bloomberg terminal, and that essentially was headlined, "Most Pennsylvanians think that their neighbor is voting for Trump, even as Biden leads in Pennsylvania." That's the silent majority. Right there are these individuals who don't identify as members of the Trump base that the world and Europe, as well as, you know, to some extent the mainstream press here identifies them as, but are much more working class, blue-collar individuals who previously voted for Obama in 2012 and 2008, and then decided that they were getting a raw economic deal. It's why Joe Biden has been so careful in how he has pitched his economic plan, a $775 billion plan to fund childcare that he's just rolling out today, that he says he's going to fund through real estate taxes. But it's why he's pushing this in a more moderate way, because he understands that to those 70,000 voters, those union workers in Pennsylvania, in rural Maryland, that those individuals are taking a very different look from the progressive left and from the far right.
Hey, Tom, before we let Kevin go, Judy Shelton, Senate Banking Committee down in Washington today, very, very busy. And some talk, Kevin Cirilli, that Judy Shelton might get confirmed. Now, several months ago, nobody thought that was going to happen. Is this seriously going to happen down in Washington today?
Everyone on the Senate Banking Committee that I speak with is saying that this actually might happen. So I think a lot of people are holding their breath at the Treasury Department and waiting to see what happens. But this has been a very contentious battle, to put it mildly. But absolutely, she could get out of committee just in time for Dr. Fauci throwing the opening pitch Thursday night at Nats Park against the Yankees.
Really? That's why I did not know that. I did not know that. That's wonderful, Kevin. Thank you so much for having me not ask you a question on the governor-elect or whatever they're calling Ms. Shelton right now.
Hey, Tom,
John, you're egging me on.
I'm all for breaking up groupthink. Well, let me read out a quote from a Wall Street Journal op-ed that Judy Shelton put together in September 2019. It would be in keeping with its historical mandate if the Fed were to pursue a more coordinated relationship with both Congress and the president. Now, if someone else had said that, I think maybe we could come to terms with that idea that the Treasury Department, the executive branch of this government, needs to work more closely with the Fed at a time of crisis. When it comes from a supporter of the president, though, this is about the erosion of central bank independence, or at least the perception of central bank independence, Tom. That's what's key about this next move down on the Senate Banking Committee today. Not about breaking up the groupthink. I think we all want to see that happen to a certain degrry, especially institutions like the Fed. But the perception of independence is powerful and important.
Lisa, save me. I've got to, Lisa, Lisa, save me.
Look, there is a question how much people are going to be accepting of political interference in the Federal Reserve, especially from somebody who is incredibly controversial, who's also argued, just to give you a sense of how out there some of her opinions are from Main Street thought, the idea of a gold standard for the dollar.
Tom, you've got 20 seconds left. If you want to
John,
say what
you
think.
two go away. I'm going back home. I'm going to go get quarantined.
I'm pleased that I found just one thing that really winds you up. I'm just going to do this on a daily basis now. Judith,
she doesn't even like the tots.
Coming up on the
Is the
program.
real yield coming back?
Vasilios Giannakis, Bang Lombiad, ODA, Global Head of FX Strategy. That's next on Bloomberg.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro, counting you down to the cash open in New York, 2 hours away in New York City, with equity futures shaping up as follows. We add some weight to the S&P, up another 25 points to the S&P 500, up 0.75%. In the FX market, a deal in Brussels, not enough to give us another lift on the euro. Euro dollar at 114.37. Seeing some real dollar weakness coming through in the last month or so on the back of this optimism around the continent. In the bond market, yields higher on the US Treasury 10-year, 0.62% is your yield. In Italy, yields continue to come lower, down 3 basis points on 10s, down a similar amount on a 2-year. Your 2-year yield in Italy now negative 0.032%. Tom Keene, a breakthrough in Europe. I think it's going to take a long time to process quite what has happened in the last 4 days on the continent.
Well, in the continent, it's a huge, huge deal. And again, it goes through the parliamentary process. Let's call that Senate out of Strasbourg. And then, as we've been talking with Kevin, you've got the stimulus in the U.S. But it comes back to the markets, John. And on a cross-asset basis, I really want to explain how odd what we're seeing right now is. And it's almost, John, to me, the equity markets are discrete from the deepest market in the system, which is foreign exchange. I'm looking at Euro Swissy, unched since time began. Euro dollar, yes, it's stronger, but by no means a breakout. I look at EM, John, peso, yeah, Argentinian peso is ugly. Even the black market, they're well out past 120, 130 pesos. I mean, there are some interesting nuances out there, but as an aside, it's quiet, except for that tech space and equities.
Well, I can tell you, Tom, dollar yen hasn't done anything for the best part of 6-7 months.
Yeah.
It still has a 107 handle. We hit 106 very briefly, but that's basically where we've stayed now for 7 months. And I agree with you. Outside of some big calls on euro dollar, that big directional trade in G10 is something many people are struggling to find, Tom.
Well, it is, and it's a depth of the market, folks. The reason we bring this up, for those of you on radio and television not schooled in this, is it's equity market, Dow, NASDAQ, SPX, and all that. And yet, John, the deepest market is foreign exchange.
Well, let's get to foreign exchange, shall we, with Vasilios Giannakis, Bank Lombard Odier, Global Head of FX Strategy. Vasilios, always great to catch up with you, sir. The absence of that directional trade in FX, a lot of people coalescing around the idea that maybe we can find it in euro dollar out to 120 and beyond. Does that resonate with you?
I think it does, yes. I don't know how quickly we're going to go to 120 or so, but definitely from both sides of the Atlantic, you have strong tailwinds in favor of euro-dollar upside. I mean, you just said it before. It's really historic what has actually happened in Europe right now. We have the issuance of common debt, disperse the proceedings into member states of the European Union. This is completely unprecedented, and I think it's not so much about the size, which is definitely needed. It's going to provide support, but it's mostly about the signaling effect. And on the other side of the Atlantic, you have all these years of flows into the U.S. You had this outperformance so many years, but right now we are in a very messy political situation. The market is also has started pricing in the Biden victory, which I think always argues in favor of a softer dollar.
Is there clarity in capital flows, or is that messy as well?
Well, that's a very good point. I think right now it's a bit, it has been messy this year. For the past decade or so, it was a very, very clear picture. Everyone all over the world, they've been pouring money into the U.S. And I think that was one of the things why in the past 4 or 5 years, we've had the dollar really picking and the dollar stepping into considerably overvalued territory, because you had a lot of flows, and because of the very, very unusual rate differentials that we had based on a long history, it was very costly to hedge that. So basically, it was a rather clear picture. I think this picture is going to start reversing, meaning that I think on a medium-term perspective, we're going to start seeing flows outside the U.S. and into the rest of the world. Euro area is going to be a very, very important destination area.
This has been a consensus of sorts this year, the idea that we're going to get a weakening dollar, that the euro is going to strengthen. This overnight, people saying the euro is turning into a credible safe haven given the joint issuance. Yet the euro is lower today, weaker versus the dollar. What do you make of that?
No, I wouldn't really read too much on it. I mean, I'm pretty sure you have a number of traders that were positioned ahead of the event. Now some of them are taking chips off the table, taking some profits. No, I think trying to read into these very, very short intraday moves is a really futile game. I think the direction of travel remains for a higher euro-dollar. The direction of this resistance is higher. Yes, it's not going to be a straight path. But as I said, fundamentally, the momentum is there. And I'm really looking for a higher euro-dollar this year.
Vasilios, how much tighter do you think Italian spreads can get to the German 10-year? Because at the moment, it's still at 150 basis points. Are you expecting that to come all the way in to in and around 50 basis points or so in the next 12 months? Have you got a call there at all?
Well, listen, I mean, as far as the House view is concerned, I think we've pretty much hit the target that we had set for this year. On a personal note, yes, I think that we can actually converge lower. Italy continues to be a source of uncertainty, but nonetheless, you know, as I said, the deal, the agreement we had was historic. You know, if you were to put a gun in my head, I would say that it's more likely that we're going to see tighter Italian spreads.
You haven't brought this up all morning, Vasilios, but let's shift over to bonds and maybe a more economic view here. Off of Y Plots and Paul DeGuire at LSE, is this day over where we do a cram down, extend duration, and lower the interest rate on all that troubled debt? Is that finally gone?
Well, you mean if gone in terms of putting a burden on the debt?
Yeah, just debt restructuring. Is it just finally over with this announcement today?
Well, no, I wouldn't put it exactly like this. I think the major step here is not about really a debt restructuring. Is about debt sharing.
Agreed.
Is really debt sharing. And I think, you know, is purely historic. For all people, especially us, that are very much biased into believing into the European project, it's a great day, I think. And I think, honestly, this is going to, I guess you can say that the pandemic, as unfortunate as it was, it actually served as a catalyst to make Europe put its act together.
Vasilios Giannakis, great to catch up with you, sir. Joining us from Bank Lombard Odier on this FX market. Tom Keane, this is about redenomination risk. In 2012, what President Draghi did on the monetary policy side was erode redenomination risk. He didn't abolish it completely. That has still haunted this market for a long, long time. But if the perception starts to build that if we get into trouble at any point, that we have a mechanism now to borrow at the European level and distribute grants accordingly, I think it erodes redenomination risk further. That's important for Italy. Bear in mind that the 10-year in Italy right now trades just north of...
Position closed on euro, £200 profit.
Has to come in to rally still.
I take your point. It's a financial exercise. I get that. Is it going to pop GDP in Europe? And the answer is not short term, and we don't even know if it'll do it long term.
Well, Tom, that's a key distinction. That is a really, really important distinction as well. There is a difference between eroding redenomination risk on the continent and revitalizing the economy. Bear in mind that this deal still has to be ratified. This fund still needs to be dispersed, and that may not happen until 2021. So when it comes to reinvigorating the economy, this is more about eroding redenomination risk, Tom. And I'd go one step further. For the continent, in terms of the recovery, the fiscal stimulus is perhaps less important than the tidy, clean reopening that we've seen through the pandemic relative to, say, the United States. And I think that's a key ingredient as to why people have become more constructive on the continent, say, versus the United States in the market at least.
This is so foreign to American viewers and listeners, John. We don't grow up with coalitions, you know, for the most part. And it's all about coalitions. Mr. Rutte has to face a coalition in the Netherlands. This is all about these people have to go home and get reelected. Will they?
This deal has to be ratified. Let's get to Bloomberg's Maria Tadeo, who joins us on the line from Brussels and has not slept for the past 4 days. Maria, great to get you on the program finally. It's a deal that has to be approved domestically in each and every single EU 27 country. Will it be?
I think at this point it's very clear that it will be. It's very unlikely that a leader goes back home if he's unsure about the ratification. And if you look at the document and the wording of it, in some areas it's very vague, and this is always done on purpose so that everyone can go back home and say, this is a good deal, we have value for money, and this is what I've done for you. And this is why it's so tricky, because, you know, they have to speak about themselves, but they also have to speak to their taxpayers. Someone like Mark Rutte today is going to go back to the Netherlands and say, I promised you I was going to get a rebate, and we have more money for the next 7 years. I've been fighting for your taxpayer money.
Yeah, Maria Tadeo, well said. The gentleman from Hungary, the gentleman from Poland, they're going to go home as well. What is the power, the impact of the Eastern European states at this meeting, and what will be their power at Strasbourg in Parliament?
Well, Tom, that is the issue when it comes specifically to Viktor Orban, that everyone here will tell you behind the scenes it's very disappointing. And it's very clear that European leaders decided to give him a pass because they wanted this deal to go ahead. There's many issues about Viktor Orban. We know that democratically speaking, there's many question marks about the direction in which he's taken the country. But at that point, at 5 a.m. in the morning, European leaders had to make a choice. Do we want to pressure him? He has a veto on the deal. We may not get a deal. Or do we just turn a blind eye and get this deal done? And it's clearly they went for option B.
Maria, great to catch up with you. Get some rest, won't you? We'll touch base with you a little bit later on. Maria Tadeo there, down in Brussels. Lisa, a deal done. As you say, the market move, not exactly emphatic, but I think this is a story that builds over time, not immediately.
And to your point about longer-term growth, if you take a look at longer-term inflation expectations in Germany, they are currently the highest since early March. In the U.S., it's not the same story. I find this interesting. Still very low, but creeping higher with the virus effort as well as this joint effort on fiscal stimulus.
We'll bring it back to the United States. Next on this program from New York, we'll catch up with Carlos Jimenez, Miami-Dade County Mayor. That will be next. This is Bloomberg from New York with your equity market shaping up as follows. We appreciate 0.8% on the S&P 500. Outside of the equity market, foreign exchange shaping up as follows for the euro dollar, negative and then positive by a couple of tenths of 1%. We are all over the place on euro dollar this morning. We inch just a little bit lower on the single currency. Your euro, $1.1441. From New York this morning, good morning. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. Joe Biden has unveiled a $775 billion plan to improve childcare and care for the elderly. It would be paid for in part by taxes on real estate investors with incomes of more than $400,000. The Democratic presidential candidate also would increase tax compliance by high-income earners. The Trump administration has now come out and endorsed mask wearing. President Trump has long resisted covering his face in public, but he tweeted that, quote, "It is patriotic to wear a face mask when you can't socially distance." Polls showed that the president's refusal to endorse masks was out of step with citizens terrified by the coronavirus resurgence. President Trump is sending federal law enforcement agents to Chicago, and he warns he could have them patrolling other major cities as well. All of those cities are controlled by Democrats. Camouflaged agents have already been criticized for firing tear gas at demonstrators in Portland, Oregon. Governors and other elected officials compared the president's actions to authoritarianism. UBS is signaling it may begin share buybacks as early as next quarter. The Swiss bank reported higher than expected new net money at its global wealth management unit. The business brought in $9 billion. We asked Sergio Ermotti what impact the results of the U.S. election will have on his clients.
According to our clients, 61% of our clients are thinking about changing their asset allocation post the election, no matter who wins.
UBS also indicated that the worst of the costs of bad loans are behind it. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it'll take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
Everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
I spoke to a number of restaurant owners yesterday. We've had numerous conversations. The bad restaurant and bar owners are going to make it worse for the good ones. Most restaurants and bars are complying. They're going through a very tough economic situation, but they're living by the rules. The bad ones, who are exploiting the situation and breaking the law, by the way.
New York Governor Andrew Cuomo there of the restaurant industry. Tom, I'm not sure I like the term the bad restaurant owners. Right now, this is just desperate for this industry worldwide. And that's the real story playing out, not just in America, but across Europe, Asia, and the whole of the world, for this industry just punished by this pandemic and restricted from normalizing. That's the key term here, restricted, Tom, from reopening their businesses and trying to normalize.
What we've seen clearly in New York City, and I should say, folks, in New York City without rain is outside dining, and the desperation is tangible. It is confusing. There is Miami Beach, there is Miami, and there's Miami-Dade County. And you have a mayor with experience with the labor of the city, of the county, in the fire department, and you have the experience of Little Havana. Carlos Jimenez joins us right now, the mayor of Miami-Dade County. Mr. Mayor, wonderful to have you with us. I need an immediate update from your Little Havana down to the south across all of your county. Give us a virus update on this Tuesday.
Well, we have a positivity rate, depending on who you look at, around 22%. We have about 2,200 people in the hospital right now. About 500 people are in ICUs, and about 300 people are on ventilators. That's, the highs that we've had here. But the good news, if you can say very good news here, is that it looks like the rate of increase has decreased. And so hopefully we're reaching the plateau. So that's what's going on in Miami-Dade County right now.
Mr. Mayor, in our discussions on Bloomberg Surveillance this morning, it is a Washington going from lunch to another meeting with a presumed idea of getting to August. How urgent is for you to see a stimulus package now from Washington?
Well, I think I know that we need a stimulus package because I know that there's a bunch of restaurants or a bunch of businesses that may not come back. Right now, what we have closed are bowling alleys and casinos and places of assembly. They're closed. We have a 10 o'clock curfew. The interior spaces of restaurants are closed, or dining rooms. Bars have never opened since the beginning of the pandemic. So those kinds of businesses really need a lot of help. Yeah, an economic package to help those who are unemployed get through this, and business owners to come back and open their business once they're allowed to open is, I think, very important.
Mayor Jimenez, your position is a nonpartisan one, but you've self-identified as a Republican. And as a Republican, how do you feel about the response to the virus, both nationally by President Trump, as well as more locally with Governor Ron DeSantis?
I have no problem with that. We get the resources that we need here in Miami-Dade. The governor's been excellent with us. Actually, we've asked for additional medical personnel to help staff and supplant some of our medical personnel that have actually gotten sick of the virus to keep it open, to expand our capacity. We've been able to do that. He's allowed us to have a certain level of autonomy down here because things are a little bit different in Southeast Florida than they are in the rest of the state. So I have no problem with what the governor has done. And so, look, it's just this was it got out of hand. We had it under control, and then sometime in June, young people started doing what young people do, I guess, and they went out and started a party and gotten together, and people and families got together. It's a little bit different down here. Families are here. The core family is here, and so we get together a lot more often. And then it started this spread. I think we can get this under control. And like I said, I think it's plateauing.
Yeah.
And and it's up to the individual person, us. This pandemic's about us, okay? And the actions that we take as as Americans and as citizens.
Mr. Mayor, without a doubt, it takes personal responsibility. Without a doubt, it has to do with social distancing and mask wearing. But that said, the virus has no borders. How important is there for to be some sort of nationally coordinated effort to prevent the virus from simply migrating from one state to another as families want to get together?
Well, the problem is it's that's easier said than done. Number one, all right. And two, we even closed our hotels, even though our hotels are open now. We're not getting too many people from outside. Our airport is down to about 1/10 of its normal activity, and so it's not this cross contamination of people coming into Miami-Dade. It was here, and then once the social activity started, it's a highly contagious disease, and so all of the the southern portion of the United States is getting an uptick, probably because we're reversed. I mean, in the north, you're indoors in the winter and you're outdoors in the summer. In the south, because it's hot, you're outdoors in the winter and you're indoors in the summer. And so I think that that has something to do with it too. So,
Mr. Mayor, the childhood of your little Havana, I'm going to guess nobody there cared about the payroll tax program the president is talking about now. Can you support your president wanting a payroll tax policy in this next stimulus?
I'm sorry. I haven't heard that, so I can't really give you a good opinion on one way or the other what the plans are. I know that the people here in Miami-Dade, they need help, especially those that are unemployed. Our restaurant industry, bar industry, nightclub industry, they're all been hard hit because they're closed. So those folks that are now unemployed need some money in their pocket, and those business owners need some kind of a help to get them back. When we were able to open, to get them back and employ those people and then get back to a normal. And the faster we get back to that normal, the better it'll be. And yeah, you need some kind of federal help for that.
Mr. Mayor, thank you for your straight talk. Lisa, John, and I look forward to bringing Bloomberg surveillance to Miami-Dade County. We're thinking the second week of March. Carlos Jimenez with the Miami-Dade County, and of course, their mayor as well. John, I think I slipped that in nicely. I think
what year, Tom?
I think,
March when?
We're taking a cruise.
22, 23?
Well, it's a serious question, John, is with the vaccine debate, folks, you really wonder. I mean, this year is drifting away, and seriously, John, you wonder when that will be.
This market's drifting away as well, Tom Keene. Equity futures up 0.7%. The Aussie dollar with a nice bid as well. Still in cash. It's rough for people in cash. Some real career risk. Can we talk about that, Tom? The career risk of not being fully allocated to this equity
this is
market
important,
as tech
John.
gets away?
This is really, really, really important on the under ownership of these fancy names by people, and there, as you say, career risk is at hand.
We'll talk about that next with Sam Stovall, CFRA Chief Investment Strategist from New York City this morning. Good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. On a historic day for the continent in Europe, we have a deal, at the leaders level at least. Will we get some kind of agreement in Washington, D.C. on the next fiscal steps? With your equity market plus 22 on the S&P 500, we advanced 0.7%. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
Greatest fear is if we continue with a system that allows pharmaceutical companies all the monopoly control over the medical solutions to this pandemic, that we're going to see a situation of a bidding war, essentially, between rich countries.
I can't block the U.S. from doing deals. Of course, I would imagine many allies would be quite unhappy at the time if they're dying, their populations are infected, and that's not being shared. So what we can do is create legal agreements with companies and try to move forward. If at the end of the day, those legal agreements are broken or countries seize assets or don't allow provision of vaccines, that's a problem.
We'll have to find a solution because some of these arrangements have been made. And I think we have to be pragmatic about it. I think we also have to stick to our guns.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
This was that crisis, and that's what we delivered with a 15+% ROE. So I think it validates the strategy, but it's our strategy. It's not for everybody. This is what we chose. We didn't want to be credit heavy. We want to be flow-based, fee-based, asset-based.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
going to be a lot more unemployment coming, and certainly a shift from what was temporary unemployment into permanent to some degree.
These companies are now starting to hunker down for a longer, more protracted recovery. And so they have to right-size their businesses.
Not everything's going to turn on right away, and we're finding out some things that were turned on and be turned back off for a little while. It's going to be bumpy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on Bloomberg Radio, Bloomberg Television worldwide. Hot and steamy in New York City. Hot and steamy 4-day conversations in Europe to some level of success. We'll talk about that in a moment. And then, of course, the stimulus discussion in Washington and all this wrapped around a market that will never, ever, ever go down. Futures up 25, Dow futures up 186. We have a 23 print on the VIX now. John, just to go to the equity markets for one teensy-weeny second, I know you want to talk Europe. I mean, come on, John, 32 to 23 on the VIX is really something.
It's an equity market that has got away from so many people, Tom, particularly on the big tech side. To see the NASDAQ 100 25% higher through 2020, Amazon up 70%, Microsoft, Apple up 35%. We have had monster moves, and the South side has struggled to keep up through all of it.
John, your thoughts on Europe? You did a tour of duty in Frankfurt, Germany. You viscerally felt that tension on the continent. How historic is this historic
It's an important
day?
moment. Europe has demonstrated or demonstrating that they can borrow at the Commission level and distribute grants to places like Italy. That was unthinkable in the last crisis. It's what many people wanted to see. I don't think it's that golden bullet, though, Tom. This is not the end of fiscal integration. This is part of the journey, and that's how you should view it. It will take a while for this story to build. The key word here, though, is crisis. It took a crisis to take this step forward. I imagine it might take another crisis down the road, Tom, to take the next important step forward for the continent, too.
Maria Tadeo in Brussels, and of course, it's been an exhausting 4 days. Lisa Abramowitz, I look at all that's going on, and really the fixed income market is the litmus paper of this system. What did the spread market do off this agreement?
Oh, well, you can see that there's definitely risk on, and this just encourages further risk on. When you talk about stocks, you have to also talk about the fixed income market. Just to give some perspective, Tom, $1.3 trillion of investment-grade credit was issued in the U.S. in the first half. That is more than all of last year alone. And the question is, how much is this supporting equity valuations, and how much further does it have to go? Are we going to see some stalling out as the pace of borrowing fades away?
There's some real mysteries here into the second half of the year, and of course, we have the stimulus. Our Kevin Cirilli in Washington monitoring Senate Republicans lunching at the White House. Right now, we monitor equity excellence. This is without question the most important conversation of the day if you're just flat out curious about this market. The Stovall family has been doing this for decades, leading the torch. Now, Sam Stovall, CFRA, Chief Investment Strategist. Sam, you know, I look at your family and the study of this, and I think I can say the Stovalls have never seen a market like this, have they?
I think we might have a problem there with the connection. Do we have Sam with us? Have we got Sam on the line?
Yes, I'm here.
Carry on, Sam, please do.
Okay. What I'm finding is that, yes, this is definitely a market we have not experienced at all in the past, or at least since we were not around during the early 1920s. So we've had many different bear market challenges, but none like this one.
Sam, let's talk about the next steps down in Washington, D.C. There's a $2 trillion spread between Democrats and Republicans. Is it your consensus position, the consensus view, the base case, that they get something done in the next 2 weeks?
Yes. Well, the question is in the next 2 weeks. I think they definitely do get something done. They realize that they have to do something. I think it's in their best interest for the incumbents who want to get reelected. But at the same time, they don't want to be tagged as the laggard who's actually dragging back or holding back both monetary and fiscal stimulus that is required, especially as the corona cases are ramping up once again.
Sam, I want to go interior to the excellence of CFRA and particularly to the dynamics of the sectors you study each and every day. What is the message we can glean by the absolute and relative performance of sectors right now?
Well, that tech is your friend, and the old adage is the trend is your friend, so you stick with it until it ends. Technology, as you know, we have been seeing, is doing exceptionally well, not only just in terms of price, but also in terms of fundamentals. Expectations are that earnings will decline, but in single digits as compared with a 45% shortfall for this quarter. Tech is the...
I think we may have lost Sam's audio. Really interesting, Tom, as we look at what we're seeing right now with respect to tech versus the rest of the world. And John, Sarah Ponzak of Bloomberg coming out with fascinating material talking about the more than 2% rally in the NASDAQ 100 versus the equal-weighted S&P losing 0.5%. You just have to wonder how much further that has to go, given the fact that earnings are expected to go down.
Well, I jumped in once, so I didn't want to jump in twice, just in case he started talking again. I do think we have a bit of a problem with that line, and hopefully we can reconnect to Sam another time. That was Sam Stovall there of CFRA. Tom, Lisa brings up the tech rally of the last several months. In fact, it's been the last several years. McKinsey, I think, have called this moment the great acceleration, and I think it's important to point that out. The forces that existed going into the pandemic are still alive and well. If anything, they have been fueled. They've had jet fuel put into them over the last several months, which is why we've seen some of these names just get away from themselves.
Well said, John, but there's something separate going on here, and I'm going to go back to the great Michael Mauboussin at Credit Suisse a zillion years ago, writing a 10-page paper for Credit Suisse where he said the winners will win big, and that there will be few winners, and with a vengeance in this crisis, we have seen selected tech winners win big. And what's so important, John, it's not just about revenue growth and the gaming of it, it's cash flow growth down below. I don't put Netflix in this group, but you look at Microsoft, Amazon, Apple, and the rest of them, the resiliency, I hate to use that word, it's so in vogue now, but it works here. The resiliency of their cash flow is stunning.
I would use another word, Tom. It's the dominance. It's the dominance of these companies, which arguably is going to get them in trouble with a regulator at some point in the future in a way that has to make them transform the business. I just don't think we're there just yet.
I don't disagree. I mean, it's almost an Ida Tarbell moment with Standard Oil a million years ago. If you just extrapolate out their growth, I do agree, John, they run into a regulatory mass that's a critical moment.
Let's bring back in Sam Stovall, shall we? Joining us from CFRA. Sam, we're talking about the big tech dominance that we've witnessed not just over the last several months, but over the last decade or so. And I know this is a difficult question to answer, but just explore the question with us. What are the limits to the rally we're witnessing right now?
Well, the limits are that sooner or later, the leaders just end up running out of steam. Right now, technology is 27% of the S&P 500. At the peak of the prior bull market back on October 9th of 07, it was 16.2. Of course, today's number is nowhere near the 35% that we saw back in the peak of 2000. But one statistic that I do look at is the difference between, you know, the role.
I think we've lost them again. Sam, we're going to let you go this time, sir. Sam Stovall there of CFRA. Lisa, big tech dominance is one story. Tech connections is another. I can do nothing about the technology connection right now. Let's talk about the dominance of big tech that is just absolutely driving this equity market higher, much higher.
Well, my question is about the dominance of the likes of Facebook, the likes of Google or Alphabet, Google's parent company, that aren't deriving the bulk of their income from cloud computing, right? I mean, it's sort of, there's a question of advertising revenue being old school model, especially if you have a declining economy. At what point does that bleed into some of the returns of those companies and we get a growing distinction within big tech, John? I think we're starting to see that, but I wonder how much more going forward.
Yeah, we should also, John, note the fever that's coming in. Now, I don't mean to say it is Tesla, but it's not like 1999 or 2000 or into March of 2001 until maybe, John, the last 3 months, I'd say 4 months. I'd leave it up to somebody.
Well, Tom, let's be clear here. Let's talk about what companies you are talking about that. I do think that is critical. If you compare now to 99, these companies right now are minting money.
Well,
the likes of Microsoft, these are just different beasts. They are minting money. There is real growth there.
Okay, but is Tesla minting money in the other Robinhood stocks? That's my question.
I'm going to let Lisa answer that question.
Well, I mean, honestly, you are seeing them turn a profit. I will just give you this anecdote. Yesterday, I was walking down Madison Avenue, one retail store after another, nobody in there. And then all of a sudden I came to a store and there was a line around the block, and it was the Apple store. And that's where people were going in and they were lining up around the block to spend $1,000 on different items. And that is currently the present and the future. The question is how much longer? And the question is, are we seeing an increase in revenues due to the pandemic, or does this have longer lasting legs in terms of the scope?
No,
Tom?
Lisa, the question is, I'm on a first name basis with a guy at the door.
You skip the line.
Yeah, AirPods.
How Tom Keane-esque to skip the line on Madison Avenue. Tom, how many times have we talked about retail on Madison Avenue, Lexington Avenue, and the shut stores? We're seeing it again. And we've had conversation after conversation with so-called real estate experts that tell us at some point we have to reset the rents. Surely coming out of this, we reset the rents.
We say good morning to all of you on Bloomberg Radio and Bloomberg Television because I believe, John, it is a retail apocalypse across this nation.
For many, many retailers, and it continues to be as well, Lisa.
Well, actually, yesterday there was a report out that showed that actually the rent was going down substantially in certain sectors in Manhattan, Lower Fifth Avenue from 42nd to 49th Street. Saw retail rent slide 30% year over year. To give you a sense, the rent has to come down, and it is, John.
About time too. Alongside Lisa Abramis and Tom Keane, I'm Jonathan Ferro. Coming up on this program, Deborah Fuller, University of Washington School of Medicine microbiology professor. That is coming up very shortly. In your market right now, equity futures drifting higher in the United States. In New York, we're up 0.75% on the S&P 500. Positive 24 points. In the FX market, big deal on the continent in Europe. Not doing much for the euro. The single currency against the dollar. Euro dollar 114.44. That risk on tone, though, reflected in a stronger Aussie dollar. The Aussie dollar top of the pile today, up by almost 1% against the US dollar. And to round things out for you in the bond market, your treasury market shaping up as follows. Yields unchanged, up by not even a basis point to 0.615%. From New York City, heard on Bloomberg Radio, seen on Bloomberg TV, this is Bloomberg Surveillance.
With the First Word News, I'm Rishika Gupta. It's a done deal. European Union leaders have agreed on a landmark $860 billion economic recovery fund. The fund is split almost equally between grants and low-interest loans. It will unleash vital financial aid to the southern European economies hit hardest by the coronavirus, and it's being paid for by hundreds of billions of dollars of common debt. That's the first time the EU has done that. Treasury Secretary Steven Mnuchin and House Speaker Nancy Pelosi begin talks today on the next virus relief plan. Mnuchin says the next phase of relief will be, quote, kids and jobs and vaccines. Meanwhile, Senate Republicans may push back on White House proposals for getting schools reopened and businesses hiring. President Trump's controversial pick to join the Federal Reserve Board is set to clear a key hurdle. Louisiana Senator John Kennedy says he'll back Judy Shelton's nomination in a vote today in the Senate Banking Committee. The full Senate would still have to vote on Shelton. And a change at the top of Carlyle Group. Co-CEO Glenn Youngkin is stepping down after less than 3 years. Koo-Sung Lee will now be in sole control of the private equity giant. Carlyle says Youngkin has decided to focus on public service. Carlyle co-founder David Rubenstein is the host of Leadership Live and The David Rubenstein Show, peer-to-peer conversations, both which appear on Bloomberg Television. eBay has ended one of the biggest auctions of the year. It's agreed to sell its online classified business to Adevinta for $9.2 billion. eBay will get $2.5 billion of cash and 540 million shares in the Norwegian firm. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Europe as a whole has now a big chance to come out stronger from the crisis. Today we've taken a historic step we can be all proud of. But another important step remains ahead of us.
I think we all hope that Europe can come out of this a whole lot stronger. Ursula von der Leyen there, European Commission President from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. 1 hour and 12 minutes away from your opening bell in New York City. Here's the price action. It is risk on worldwide. Your equity market up 25 on the S&P. We advance 0.8%. Treasury market unchanged at 62 basis points on a 10-year. In foreign exchange outside of the euro, it's that bid into the Aussie, Tom. The Aussie dollar outperforming in G10, really capturing that improving risk appetite this Tuesday morning.
It's there. There's a bid to this, folks. I really want to make clear. We've seen an up, a lift when we came in the door this morning, but it's continued 23, 24 SPX up 25, and the VIX at a 24.00. Right now on the virus, I want to do something different. We talked to a lot of fancy people at Johns Hopkins, Dr. Hotez down at Baylor, and of course we talked to Deborah Fuller of microbiology at the acclaimed University of Washington School of Medicine. I can't say enough about her accolades. Dr. Fuller, I want to talk about the guys in the trenches, the people working for you, and I want to focus on Jesse Erasmus, who's one of these people where we're all going, yeah, and someone like Jesse Erasmus is the doing of finding a vaccine, in your case, with primates. What does Mr. Erasmus do every day?
Yeah, Dr. Erasmus is a postdoctoral scholar in my laboratory. He's really a superstar. He actually just joined my laboratory in January, and that's, when the sequence for SARS-CoV-2, the virus that causes COVID-19, was published. And he messaged me, I think it was in the middle of the night, sometimes, hey, can we make this vaccine? Because our laboratory works on RNA and DNA vaccines, which only really require the sequence of the virus to make. And I'm like, well, sure. So, within a week, he had a series of vaccines designed and was already immunizing animals with them within 3 weeks. So, yeah. Yeah, so he's a superstar. So
Okay, well,
he's in there in the lab every day. Yeah,
he is a superstar, like on the Tottenham Hotspurs in England. I get that. But Deborah Fuller or Jesse Erasmus, what would you say to the president today as he starts his virus press conference? You guys are the doing of it. What do you say to any given politician?
Yeah, I don't really get so much into politics, I guess, but in that regard. But certainly, I think that we really need to continue to address this pandemic and to support obviously the research behind it, not just for vaccines, which obviously is going to be critical for shutting down the pandemic, but also to follow the science in terms of how the virus is transmitted and what we can do to reduce that transmission and to control it until we have a vaccine. We're going to all have to work together as a public, to wear masks, to follow the guidelines of the health care professionals and scientists as to how best to control this.
Dr. Fuller, when will we get a vaccine that can actually be widely enough distributed to put an end to the pandemic?
Yeah, the last few weeks in terms of vaccine research has been really, really groundbreaking. There were 4 manuscripts published in the last 4 weeks on clinical trial results from Pfizer, from Moderna, from BioNTech, a number of different companies, including the Oxford University in collaboration with AstraZeneca and another group out in China. And all of the data are indicating positive results in those first initial clinical trials, phase 1 and phase 2, that they're getting, seroconversion, antibody responses in these subjects, as well as T-cell responses. And all of the data has supported them continuing forward into the next phase of their clinical trials. And this is really critical because this is, the steps that you have to take before you can bring a vaccine into the market. You have to confirm that they're safe. You have to confirm that they're effective in initial clinical trials. And so all of these groups met their endpoints, their benchmarks, to be able to move on to the next step. And so the trajectory right now is prediction is early 2021, late 2020, even, some people are projecting even, late, right before 2021, that maybe they'll have some of the initial vaccines, several hundred millions of doses going into the public. So, but, it remains to be seen. There's always potentially some other hiccups. They still have some additional phases to pass before we can bring in out to the public.
Well, Doctor, let's talk about what we still need to learn as we investigate and research this particular virus. Do we have a firm handle on how the immune system responds to this virus and why this particular one is unique?
Yeah, we don't have a firm hand on that. One of the couple of things that we're learning are 2 important aspects with regard to vaccine development. And one is that in, convalescent patients, we're seeing a more rapid waning of antibody responses than we had hoped for. And that means that possibly the just getting infected itself may not build up immunity. You might need to have, even if you were infected before, still have to get the vaccine. From the perspective of the vaccine side, we don't know whether the vaccines are going to do better than that. We try to make vaccines do better than nature, but so, in all of these clinical trials to date have not followed the immune response long enough to know whether or not the vaccine is going to be able to do better than that. A second piece that is really exciting, actually, I think, is that there's data emerging that another type of immune response, cellular immunity, T cells that can actually see and eliminate infected cells from the body, they're finding that's correlating or associated with better recovery in people who have become infected with COVID-19. If they have better T cell responses, they can have less disease and recover more quickly. And that means that's the kind of immune response that we're likely going to want to also have our vaccines induce, both T cells as well as antibody. And both those types of immune responses may be able to work together to provide a more effective protection.
Doctor, those two final points are absolutely critical, and we look forward to carrying on the conversation with you. Thank you for joining us today. Deborah Fuller there, University of Washington School of Medicine, microbiology professor. Tom Keene, how the immune system responds to this particular virus is, of course, where all the research is going right now to work out the best way to treat the virus and ultimately build a vaccine. Politico
had a nice summary of this today, John. It's hugely complex. I can't emphasize enough. It's not like a binomial thing, one or two ideas. It's like 5, 6, 7 outcomes that you could get. It's a huge mystery right now to the pros.
And Tom, Lisa's question as well on how this eventually gets rolled out. There's a real prospect that you might have to have boosters as well. And how we roll this out, once we actually get the vaccine, is another challenge in and of itself.
Yeah, and there's people working on this already. I know Becton Dickinson is and others are working on the distribution of it, but it's a real challenge. John, note, weaker dollar, breaking down.
Yeah, the equity market breaking up higher, up by 0.8% on the S&P 500. Coming up on this program, we'll head down to Washington. There's going to be a Senate Banking Committee today with a controversial governor pick in the mix. Senator Chris Van Hollen of Maryland will be joining us next from New York. This is Bloomberg.
Now, if we continue in the trend we are, by 2030, we will have 840 million people undernourished. And COVID-19 exacerbates that even more. And our projections is that with COVID-19 in 2020, we will increase undernourishment between 83 and 132 million people more going into undernourishment.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The national security bill was passed by Chinese lawmakers. The Hong Kong police force has already acted in accordance with the new law.
It's a very disturbing development.
This is, in effect, an attempt to end one country, two systems.
The central government is telling us just stay out of politics.
2% inflation goal is symmetric, which means we should overshoot it. We're having a difficult time doing that. Like all developed economies, I'm supportive of the idea of letting inflation get above 2% before we take any action with respect to the Fed funds rate.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your opening bell, 60 minutes away. Your equity market higher, much higher. S&P 500 futures up 23. We're up 0.7%. In the bond market, yields unchanged here at 0.61%. The euro doing absolutely nothing with the euro dollar at 114.51. We touched on it just a little bit. The risk appetite building in equities, see it reflected in the Aussie dollar. The attention, though, right now, away from Brussels, onto Washington, D.C. Tom Keene, we'll get to the fiscal stimulus conversation in just a moment. Just slipping under the radar, coming upstairs into the news flow, top of the pile, Judy Shelton, Fed nominee, potentially being confirmed, Tom. And this story's starting to move forward and progress in a way that maybe people didn't anticipate just a couple of months back.
I agree, John, strongly. This is an interesting moment for economics and for the Federal Reserve System. I've interviewed Ms. Shelton any number of times, and I'll be fully direct. One of them, John, it didn't get nasty, but there was a lot of back and forth about foundational theories of economics. Part of this is about academics. He is from one of our most esteemed families, 3 generations of public service and academics. His grandfather at the acclaimed Middlesex School outside Boston. His father, our ambassador to Sri Lanka, and now he serves the nation as a senator from Maryland. Chris Van Hollen, the Democrat, joins us right now. Chris, this is going to be really interesting, and to me it's almost cultural warfare in economics. Ms. Shelton has her own qualifications, and many say they simply don't fit the job. Where is she deficient?
Well, I think she's primarily deficient in 2 areas. One is her economic theory, which is way outside the mainstream, which is, great for private conversation and writing columns, but we're talking about the Federal Reserve, the machinery of the U.S. economy, at least a big part of it. And so when she talks about, going back to the gold standard, when she talks about getting rid of things like federal deposit insurance, these are things that are pretty scary. The other piece to this is if you look at her statements over a period of time, at least over the last, say, 10 to 15 years, the only pattern is a political one. She criticized Bernanke and Yellen for the measures they took at the Federal Reserve. She was very opposed to lower interest rates. But now that President Trump has been calling for lower interest rates, all of a sudden, there she is, calling for the same. So at the Federal Reserve, we really want independence. And I think what we're getting here is somebody who's more political than anybody we've seen, at least in my time on the Federal Reserve.
So, Senator, is that the more important dimension here? It's not the caliber of the candidate, it's eroding the perception of central bank independence.
Well, that is a big part of it, and that's why you had Republican senators also opposing the nomination. Apparently something's changed in the last couple of months. I don't know if the White House brought political pressure to bear or what, but the reality is if you go back and look at the statements of my Republican Senate colleagues, they expressed exactly the same concerns. And so this is a very worrisome development because we don't want someone at the Fed who is a political rubber stamp for anybody, in this case, the president.
Senator, you could argue that there already has been a blurring of the line between the Federal Reserve, between monetary and fiscal policy in an attempt to combat the effects of the coronavirus. I know that there is a congressional commission questioning the use of federal funding to buy corporate bonds by the Federal Reserve. How concerned are you about that being a precedent going forward, given some of the plans that have been implemented this year?
Well, the issue with the Fed's actions when it comes to corporate bond purchases really goes to the gray line between what is their authority and not their authority. I think the Fed has overall done a good job during this period of time. I think there are legitimate questions to be asked regarding their purchase of junk bonds, and especially the question about whether or not they're purchasing bonds from companies that were already in trouble and very over-leveraged before the coronavirus hit. What we need to be focused on is really helping companies that have been hard hit because of the coronavirus, not those that took risks and were already in trouble before the coronavirus hit. So that's kind of at the intersection of fiscal and Fed policy, and it really goes to the question of what the Fed's mandate is. But again, I think if you listen to Powell when he comes before the Senate, he's very careful not to wade too deeply into fiscal policy, and the Fed continues obviously to have jurisdiction over monetary policy.
Well, Senator, let's talk about fiscal policy. At the moment, there's a $2 trillion spread between what Republicans are looking for and what House Democrats have asked for, and a bill that they've already passed. I just wonder how that narrows in the coming weeks. Of course, the negotiation begins, and when you start a negotiation, you start with your boundaries and your red lines. What's yours, Senator?
Well, look, I'm supporting the HEROES Act. This is the bill that passed the House weeks ago now, and now we're coming down to the last couple weeks before things like the unemployment insurance run out, the enhanced benefit. So my view is we've got to find a way to come together. I think the House bill is exactly the right starting point. We haven't even heard from Senator McConnell and the White House other than a few press statements. So hopefully today and tomorrow we'll be able to get a lot more definition as to what they want to do.
I look, Senator, at this fiscal debate, and it's an overlay upon overlay. I want you to explain, as a reasonable guy from Maryland, how the nation absorbs a $4 and on its way to $5 trillion deficit. Scoop Jackson, Hubert Humphrey would be appalled. Christ, LBJ would be appalled. How do Democrats adapt and adjust to the deficit that is to come?
Well, in this case, the challenge we face is if doing nothing and allowing the economy to sink totally, of course, also has a huge negative deficit impact, right? So in this case, we're spending money to try and keep afloat. And so there's no doubt that this is going to add trillions to our deficit.
Right.
I've been one of those who have, argued that we need to be, prudent here when it comes to deficits. I think we're going to have to look at a variety of things. As you know, that the $2 trillion addition to the deficit from the Trump tax cut just put us further in the hole. That's not my number. That's the Congressional Budget Office number over 10 years. Mm-hmm. So look, we're going to have to figure this out going forward, but. Probably the worst thing for the deficit at this point would be for the economy to be even harder hit.
I look at the past here, Senator, and I think of Pat Buchanan, Richard Nixon, and of course from Maryland, a gentleman by the name of Agnew. I'm assuming Mr. Agnew never had lunch with your father, but what he did is identify the silent majority. How does your candidate, your guy, win the silent majority this time around? The president assumes he owns it.
Look, I think Joe Biden has a reputation and a career for really listening to working men and women, and his policies, come from that center of his character. And I believe that at the end of the day, most Americans they want that sense of opportunity. They want a sense that everybody in America can make it. And they also want a sense of decency. I mean, they want a president who, they don't have to hide the kids every time the president makes a statement. And I do believe that the silent majority also believes that. And I think when it comes right down to it, people are going to go into that voting booth and they're going to look at the economic platforms of the candidates. And I think, Biden will do very well there, but I also think they're going to use a measuring stick of common decency.
Senator?
What kind of character do we want in the White House?
Senator, when people go into that voting booth, are they going to be voting for higher taxes when it comes to former Vice President Biden, given the fact that his latest proposals do include levying higher fees, particularly on wealthier individuals?
Well, when it comes to very high income individuals, yes. I mean, we just were talking about issues of the deficit as well as issues of investment in opportunity like education, including early education. And yes, what Vice President Biden has talked about is the folks at the very top can contribute more. They got a tax cut under Donald Trump. Really, that wasn't something that was needed for the economy. and now we need to make important investments. And so, yes, the vice president has called for a reversal of the tax cuts for folks at the very top. I think that position is supported by the overwhelming majority of the American people.
Senator, one final question for you, and I know it's a subject you're passionate about, is China and the Chinese Communist Party. How difficult is it going to be for the former Vice President Joe Biden to convince the electorate that he can influence the behavior of Beijing after being in government for 8 years with President Obama and failing to do so?
Well, as you know, when it came to issues of standing up to China and human rights and those important issues, standing up for the principles we believe in fact, the Obama-Biden administration was much stronger than the Trump administration. I mean, we've got a president right now, we know from John Bolton's book, who essentially praised President Xi's approach to the Uyghurs. We know when he was a private citizen, President Trump actually was he was envious of the ability of the government of China to crack down in Tiananmen Square. This is a president who did not want to stand up to China when it came to Hong Kong human rights. The Trump administration opposed the bill that Senator Toomey and I had right to the very end. It was only because there was an overwhelming bipartisan veto-proof majority that the president signed that bill the other day. So I would put the Joe Biden record up against Donald Trump when it comes to standing up to China any day of the week.
Senator, what I'd love to do is carry on this conversation on China with you in particular in the coming weeks. We'd love to get you back on. Senator Chris Van Hollen there of Maryland. Tom Keene, really, really important to point out here that Senator Van Hollen is one of those China hawks, not on the Republican side, but on the Democrat side, that I think we need to get a better flavor of in the coming weeks and months.
There's no question about it. It's one of the few bipartisan issues. All the research shows us, and every China expert we speak to, John, this is something foundational, is the bipartisan nature of this thrust against China.
Coming up on this program, I'm looking forward to a conversation with Meg McLennan, JP Morgan Asset Management Head of Private Credit. From New York City this morning, with equity futures up 0.7%, this is Bloomberg.
With the first web news, I'm Rishika Gupta. European Union leaders have agreed on a landmark $860 billion plan to rescue economies hit hard by the coronavirus. It's built around a first for the bloc, hundreds of billions of dollars of common debt. The emergency fund is almost equally split between grants and low-interest loans. Italy is likely to be the biggest beneficiary. It was the original European epicenter of the pandemic. Joe Biden has unveiled a $775 billion plan to improve childcare and care for the elderly. It will be paid for in part by taxes on real estate investors with incomes of more than $400,000. The Democratic presidential candidate also would increase tax compliance by high-income earners. President Trump is sending federal law enforcement agents to Chicago, patrolling other major cities as well. All of those cities are controlled by Democrats. Camouflage agents have already been criticized for firing tear gas at demonstrators in Portland, Oregon. Governors and other elected officials compared the president's actions to authoritarianism. And UBS is signaling it may begin share buybacks as early as the next quarter. The Swiss bank reported higher than expected new net money at its global wealth management unit. The business brought in $9 billion. We asked Sergio Amotti what impact the results of the U.S. election will have on his clients.
According to our clients, 61% of our clients are thinking about changing their asset allocation post the election, no matter who wins.
Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
true diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index, true diversification.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume. No matter what, we keep on, so you can keep on.
Is that developing countries are under immense pressure because of the global recession, the economic shutdown in the advanced countries, and the pandemic itself is still spreading through countries. And they also entered this problem with a lot of debt already on their books.
An important conversation with the World Bank President David Malpass there from New York City this morning. Good morning to you all as we advance the conversation towards the opening bell here in New York. Equity futures up 22 points. Tom Keene, I'll be catching up with Mona Mahajan, Allianz Global Investors U.S. investment strategist in around about 15 minutes' time.
That'll be very good. And certainly the balance here right now between equities and bonds is front and center. Meg McClellan at J.P. Morgan has written a brilliant note on this, and this is really, really an important conversation, particularly for those of you who are behind. There's maybe a few people out there that don't own Amazon and Apple up to their eyeballs. Meg McClellan is at J.P. Morgan Asset Management, and she's head of I'm way, way behind in this bull market. Meg, I love what you wrote about the 60-40 traditional split. Everybody knows it's out the window. There is a panic that I'm not participating. How do I participate? How do I catch up?
Question. So I can't take credit for writing that. That was our investment bank. We've certainly been talking to a lot of clients about the topic. So, the ways that you can diversify a traditional 60-40 portfolio, are in fact credit. So that is a great diversifier. But I think people stop sometimes in the public credit markets and neglect to look into the private credit markets. And right now, the private credit markets, for those who can give up some liquidity, offer a significant pick in yield and income over public markets. And I frankly think the private market opportunities are extremely compelling right now.
Meg, let's talk about the fundamentals right now in private credit. They're less visible than what we're seeing in public credit, and yet we're hearing ongoing concerns about a lack of revenue. Companies shut down by the pandemic, the potential bankruptcies starting to swell. How bad is it in private credit land versus public credit land?
Certainly. So, Lisa, that's one of the challenges of private credit is a real lack of data to look at. And so I think the place people can start is really looking at some of the public data coming out.
So the damage inflicted to issuers by the pandemic and the lockdowns will become evident in some second quarter earnings. We're going to be looking at debt ratios and things like LBO purchase multiples, EBITDA adjustments. In those types of trends, what we are seeing is that in the corporate space, the purchase multiples have fallen after a multi-year rise. So that type of a trend is actually positive for lenders. But we're still seeing big EBITDA adjustments, so big earnings adjustments that are near all-time highs. So that could be completely appropriate, where we're making adjustments for a short-term impact of the pandemic. However, if that pandemic impact is longer term, those EBITDA adjustments have net potential negative impact. Yeah. The other place we're looking is really the downgrade and recovery rates. We saw data through May of this year that indicates significantly lower recovery rates of around 45% on loans versus a long-term average of about 77%. So, those are, to your point, indications of some of the impact of the pandemic and the indicators that we're watching closely as we're thinking about where to help clients put money to work.
Just broadening out, there is too much debt in the corporate sector right now based on where we're seeing growth. Perhaps we're going to see an uptick in global growth. It's unlikely based on what a lot of people are saying, at least not significantly. Who is going to bear the brunt of the losses when there are the inevitable haircuts, the write-downs, the fact that companies are going to go to their creditors and say, we can't pay you back. How much can we pay you to make it worth your while?
So I think, again, this is a very unique time for private markets to step in. So we know that there's going to need to be significant restructuring. We expect opportunities for workout and debt restructuring to grow significantly over the next 6 to 24 months. So you're going to see the public lending programs mature. You will see banks, as you saw last week, that are starting to take loan loss reserves. Those are going to need some work. You're going to see public markets companies. You're going to see fallen angels. You're going to see more potential distress in the markets. And we think, over that period, private capital will need to step in and help those companies with capital solutions that give them the flexibility and the ability to restructure to earn their way out. And again, if I'm thinking about where I would put a marginal dollar, you want to look for things that, kind of pre-pandemic were trends that were already in acceleration, potentially accelerated because of this impact. And steer clear of places, and I'm thinking like the retail, where we've been underweight in a number of places, the traditional retail, which has been, decline accelerated by this pandemic as well. So, I think those are the places that I'd look for opportunity set.
The shell game here, Meg, this is so important. The shell game here is I can be smarter than the street, that I don't have to do traditional securities analysis. I don't have to do traditional portfolio management. Is the shell game over? Is the end result going to be this wall of private money just simply buys more S&P 500 companies, either in merger or in roll-up or just outright ownership?
So I certainly would say that there are a number of research points that in the private markets you tend to have more depth of understanding of and ability to work with individual companies to tailor needs, for their lending outlook. So, if you think about kind of public markets, if you're buying into an index, right? So I'm not talking about active managers where there's deep security selection. I'm talking about buying into like an index. You're subject to whatever's in that index. In our markets, each one of these loans that we're originating or each one of the loans that we're underwriting, you really are getting to know the borrower profile. We've typically got a lot of research specifically on our alternatives platform around things like the real estate backing it or the healthcare company backing it. And so that depth of research in some ways is actually deeper because you can get into more idiosyncratic individual conversations with private loans versus participating in kind of more public index types of deals.
Meg, thank you so much. Meg McClellan this morning with J.P. Morgan. Interesting there on private money, as they say. Lisa, the BBDXY Natalie just had up. Bring that up again, folks. This is the blended Bloomberg Dollar Index. It's actually very, very good mathematics. And Lisa, I'm sorry, this is a real breakdown back to June levels with some serious weak currency, weak dollar here.
Yeah, and a lot of it's driven by the euro just starting to strengthen a little bit further to those highs that we saw, the highest at one point yesterday since January 2019. And it really goes to a fundamental question, Tom, that we've been talking about, which is, can we see a weaker dollar and the stock rally continue indefinitely? globally. This idea that money continues to come into the United States despite the fact that there is this risk-on feeling and this feeling that the rest of the world really needs to catch up, Tom.
On the vanilla DXY index, 58% euro weighting, 14% yen weighting, and the British pound is 12% weighting. We forget about that with sterling 125 out to a stronger pound sterling 127 as well. So that's worth watching. Our futures up 25, now up 23 as well. Lisa only looks at the bond market. The bond market's like, you know, churning. It's there. A little bit of curve flattening, I'm going to say fractionally as well. Coming up, it's really interesting organic sales growth. The headline really captured my attention at the Coca-Cola Company. They've got some unique challenges in this pandemic. They've got some unique challenges just in product marketing as well. James Quincy in the 11 a.m. hour. Stay with us through the day. A most eventful Tuesday. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians added regularly. Enjoy these selections and much more at bso.org/at-home.
None of us are safe until all of us are safe. We need to have a global approach into handling and fighting COVID-19, a global pandemic. Part of this, of course, finding an effective vaccine.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York City for our viewers worldwide, good morning, good morning. The countdown to the open starts right now with 30 minutes until the opening bell this morning. Good morning to you all. Equity futures up 0.7% on the S&P 500. We begin with the big issue. EU leaders reaching a landmark stimulus deal, setting up a €750 billion recovery fund and sending the European Commission to borrow in the capital markets. A Relief Commission President Ursula von der Leyen addressing the continent.
Europe as a whole has now a big chance to come out stronger from the crisis. Today we've taken a historic step we can be all proud of. But another important step remains ahead of us.
The German Chancellor Angela Merkel echoing that sentiment, saying, quote, "We have come up with a response to the biggest crisis the EU has ever faced." Joining me now from Brussels is Bloomberg's Maria Tadeo. Maria, fantastic to catch up with you. We have an agreement. How easy will this be ratified back home?
Yeah, exactly. Look, the question is now everyone will get on a plane, they'll go back home, and they have to sell this deal as a win for their country and their taxpayers. But I would say, you know, when leaders come here to Brussels, they're very aware that they have to negotiate among themselves, but they also have to factor the national politics. They have to be able to show or be able to be very sure that this is going to fly back home. So overall, you could argue if this was signed and approved here, it's because the EU 27 leaders believe that when they present this to their national parliaments, this is going to be approved. It's unlikely that a European leader would take something from here if they're not able to sell it back home. It's not going to be easy. We also know the European Parliament has to weigh in on this, but the assumption here is that this deal was agreed because everyone believes it can fly.
Maria, I want you to talk to us about how important this moment is for the Europeans, for the continent. We have proven that when we hit a crisis, face a crisis, we can borrow at the European Commission level and we can distribute funds as grants to countries that are struggling. I'm trying to work out if this is the blueprint for the next crisis or a step in an ongoing process where we can do this again at some point in the not too distant future.
Well, look, it depends who you ask. When you speak to the Italians, the Spanish, the French, they'll tell you the foundations for deeper integration, the rule book here has been changed. And I know that oftentimes we say these summits are so complicated, they go on for so long, the Europeans, they take so long to get anything done. But the bottom line here is that 2 weeks ago, a month ago, we were talking about your typical bailout, cash for reform, strings attached, something that could look like the Greek crisis. When you look at what's happening here, the European Commission is going to tap the markets and AAA bonds to hand out money to countries like Italy and Spain that essentially they're not going to have to repay. This is not going on their debt to GDP balance sheet. This is a real breakthrough. You can argue the amounts are not as big as maybe Emmanuel Macron and Angela Merkel were hoping for, but this is totally different to anything that we've seen before in the European Union.
This was always about the optics. It was the signal, not the size. Maria, fantastic work over the weekend and into this week. A tired Maria Tadeo over in Brussels. Emily Rowland of Jan Harcock Investment Management recently upgrading European equities to neutral, writing the following: monetary policy is finally passing the baton to fiscal stimulus in Europe and global equity leadership may shift as a result. However, we need to see earnings revisions overseas improve versus the United States before we can fully embrace the shift. Emily Rowland joins us right now. Emily, brilliant to catch up with you as always. Why still reluctant then to allocate capital to the continent, to Europe?
John, thanks for having me today. So there's really three things or inputs we think about when making the decision to shift into overseas equities. And the first is that we want to see better relative economic growth. And we've started to see signs of that. If you look at composite PMI data for the month of June, it actually beat the U.S. for the first time since February. You know, part of that could be because of rising COVID cases here in the U.S., which we're not really seeing overseas with that cleaner opening. But we're continuing to watch that, and we'll get more PMI data on a preliminary basis on Friday. The second thing that we want to see is a weakening dollar, and that's somewhat related. There's been a lot of talk about that on Bloomberg this morning, with the DXY now having fallen below its 50 and 200-day moving average. Again, potentially related to that divergence in economic growth, but something that we're watching that certainly has changed. But the final kind of element that we look for is better relative earnings revisions overseas than we're seeing in the U.S. And when you look at next 12-month earnings estimates in the U.S., you're actually starting to see that bottom and start to improve. And when you look at that same data for the EFA or the EM index, we're actually seeing earnings estimates very depressed. So we want to see that third catalyst really kick in order to more fully embrace overseas equities. But we have made some changes in order to sort of recognize these trends that are playing out. So we've removed our most defensive positions internationally. So we did have a bias towards dividend-paying stocks. We liked low volatility overseas, things like infrastructure. We've removed that, and we do want to have some more beta within the international markets, and certainly our preference for EM over Europe reflects that view.
Emily, there is a camp, a belief, a group of people who believe that what is taking place in Europe right now will lead to a significant re-rating of just how we value a single euro of earnings on the continent. Does that resonate with you at all?
You know, it certainly does, and it's great to see kind of fiscal stimulus kick in overseas. You know, in the U.S., we've been good at implementing both monetary and fiscal stimulus, so it's nice to see that baton being passed. But if you think about the catalyst for markets right now, to us, you know, the fiscal stimulus catalyst is sort of starting to fade here, actually. Certainly, we're seeing a nice reaction to it over the last couple of days, but the markets are increasingly focused here on the virus and getting a solution to the virus in the form of treatments or vaccines. And fiscal stimulus is great, and it kind of gives us that shot in the arm and it buys us time to get there. But we think that markets are going to be increasingly focused on actually identifying a solution here in the months to come.
Well, worth pointing out that the grants that have been agreed over in Brussels over the weekend and into this week, that money won't be deployed for a long time. They've got to borrow the capital, then they've got to distribute the capital. It could be 2021. Emily, on the growth differential, that has been so much more compelling for the United States versus Europe over the last decade or so. Many people are starting to believe, though, that because the reopening process in Europe is tidier, cleaner, at least relatively speaking to what's playing out in the Sun Belt in the United States, that's a reason to allocate from the US to Europe. Are you thinking about that dynamic, that the growth differential between Europe and the US becomes a little bit more compelling for Europe versus the United States?
Listen, it's really hard to use COVID-19 as an input into making asset allocation decisions. There's so much uncertainty around it. There's just so much that we don't know, but we think it's important to recognize it. And we think that that's the reason that you're starting to see, or at least part of the reason you're starting to see this weakening play out in terms of U.S. currencies. It's part of the reason you're starting to see this divergence play out in economic growth. So it certainly needs to be recognized, and these second wave risks and the reopening narrative that is now becoming more challenged in the U.S. is becoming a bigger part of the investment input. But we've really been thinking about, because of this uncertain backdrop, we have gravitated into high quality stocks. We want to own quality in the U.S. We've notched up on quality also within our fixed income allocations, and we've really wanted to have exposure to equity markets. We're neutral equities versus fixed income, but we've wanted to do it with a very risk-managed mindset. So I think as the challenges continue to mount around COVID-19, it's important to remain focused on that quality approach.
Emily, when you say quality, what do you mean?
So we're looking for companies with good return on equity. We want strong balance sheets. We want good, solid debt to equity ratios, and we want low earnings variability. So that's really brought us to embrace sectors like technology and communication services on sort of the offensive side. But we want to maintain some exposure to sort of classically more defensive parts of the market, and that quality overlay has brought us to areas like consumer staples in the U.S. as well as healthcare. So really that barbell approach is allowing us to, again, participate in equity market upside, but also have some ways to keep that risk management element within the portfolio.
It's taking a lot of people also, Emily, just to jump into tech stocks. When they think quality, they're thinking of strong balance sheets, they're thinking of tech names. And I just wonder how appreciated the cyclicality of tech spend actually is at the moment, given what we're seeing play out in this equity market.
Well, I thought tech was the new defense, right, John?
Yeah.
So really, that's the way that tech has behaved, and you could see some cracks along the way. I mean, tech stocks are really priced for perfection in this environment, and you can see that as far as some of the earnings results that we've seen so far in terms of growth names that had priced in, you know, possibly unrealistic expectations. And even though they're doing well, their stocks have been punished. And on the value side of the house, the expectations or the bar being set so low, and you're starting to see some upside surprises in areas like industrials and materials. And, coming into this quarter, frankly, we had thought about more fully embracing cyclicality. We weren't quite ready to go there yet because of the uncertainty in terms of the economic recovery outlook. But we're seeing some signs of life from that side of the house. So once again, that balance between growth and value is really, we think, the sweet spot in terms of positioning today.
Emily, just a final question for you. A key theme of this program that I imagine will pop up again and again over the next 60 minutes will be that dollar weakness story. What's the optimal way of playing that through the equity market from your perspective?
So when we think about a weakening dollar environment, clearly that's going to be accretive for unhedged investors here in the U.S. in terms of their overseas investments. We prefer to play that through emerging market equities. They have a lot more sensitivity to the weaker dollar trade. We don't want to miss out on a rebound in emerging market equities, and certainly we've been positioned well for that at this time. We're not quite there yet in terms of non-U.S. developed markets. There's a ton of cyclicality in terms of owning that part of the market. We're not quite there yet on areas like European banks. So emerging markets to us, along with international growth over value, is really the way to play this.
Emily, good to see you looking well. Fantastic to catch up with you as always. Emily Rowland there on this market. Coming up on this program, we take the fiscal conversation away from Brussels to Washington, D.C. Up next, David Kelly of JP Morgan Funds, the chief global strategist. 19 minutes away from the opening bell in New York this morning. Good morning. Equity futures drifting higher. We faded a little bit, but we still advance, up 0.6%, up around 20 points. From New York this morning, good morning. You're watching Bloomberg TV.
Opportunity knocks at the door. Don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you in interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacroix.
Does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
A lot of the $3 trillion we still have left to put in the economy and put back to work. We're focused on starting with another $1 trillion. We think